so far 22. We will probably ramp up in terms of the number of participants over the next few minutes, but we'll start on it. I know it's a topic that is probably dear to a number of you, and at the same time, complete Chinese for a number of you. Now, in total, we had about 65, a bit more than 65, who have registered for this, and I went through a bit your profile. I know several of you, so you're coming from our community, being it Agritech, being it Berytech, being it on other accelerators that we have in Lebanon, and now the challenge is going to be to provide information so that I don't lose several of you, and at the same time I don't bore others. So it's going to be a balancing act. What I want to tell you is that this webinar is here to help you get the background, the foundation of it, and it's fairly complete. I've put the final touch to it yesterday evening, and you should have enough information. All the slides will be available. Sheila is with us. She is working at Berytech. And she's the one who took care of the registration, and she will be forwarding the slides together with other supporting documents that I will share with you. So you'll have available. So you're going to have the webinar, you will have the documents available, and most importantly, for those of you who are interested, I do a number of one-on-one sessions all day yesterday and all day on Wednesday. On Wednesday. I spend what we call clinics. These are an hour and a half sessions. Then I focus on what your needs are and how can I help you, help your team, help your company in terms of valuation, in terms of preparing yourself to pitch in front of investors. And so this is something that I'll be more than happy to do it. So what I would then recommend, if you're interested, just reach out to Sheila. And when you're going to fill your questionnaire, not questionnaire, but the survey response indicates that you're interested, and then we will get back to you and fix a date for a one-on-one session. So it's a combination of different services. One is you're going to have the webinar. Two, you're going to have the documents. Three, we'll have the one-on-one sessions as you, depending on what your needs are. Okay, so this is a bit the. Now, during this 3 hours, I've asked several people to come in for about 3 to 5 minutes and to give a perspective of their perspective from their experience in terms of either funding companies or in terms of valuing companies or in terms of valuing their own companies and what were the learnings that they took from it. So you won't only hear it from me, you're going to hear it from a number of different players in this ecosystem. And the good news is that despite all the problems that we are facing, being it with the financial crisis and being it with the corona crisis that is affecting our country very dearly and is increasing the number of people that are unemployed, is increasing the number of people in poverty, the good news is there is still continuous momentum in funding and in coaching and in accelerating companies that either have been launched already or are in the process of being launched. So Berytech is one of the players behind it, but they have other players in the ecosystem. And the other piece of good news is that there is a strong support, not necessarily from the government, as the government has their own challenges, but more coming from international NGOs, from international donors, in order to be supporting this sort of activities. As the government is facing their challenges, our banks are facing their own challenges. We cannot let go of the small and medium-sized enterprises. And by saying this, there's going to be several programs rolling out over the next few months that are here to support, and they're here to, in terms of grants, in terms of funding, in terms of coaching services, that are here to support SMEs in the country. It's and hopefully by this creating job, and hopefully by this providing employment opportunities to people who are currently unemployed. So I want to start with this piece of news. So despite all the tough times that all of you are facing, there is a rays of hope we're here as Berytech and other players to ensure that we could help assess your needs and respond to these needs as best as we can. Okay, so this is for an introduction. Appreciate Sheila's help in terms of doing all the registration and all the follow-up on it. Thank you, Sheila. And what I'm asking you, so all of you have muted the phone, this is great. I'm going to stop, every half an hour and then let you then ask questions on it. So instead of doing so we'll have enough time for you to ask your questions. And then I'll also stop to let the people who will be participating and contributing to also share their experience. So they will be coming online over the next 3 hours, and I will give them the chance to be able to speak. So what are we going to cover today? What we're covering today is I'm going to try to answer the following questions and see whether these questions are enough or you have other questions that you want me to answer. So the first question is why? Why do we bother about valuing companies, and when do we do it? So why do we go through it? The second question is who really benefits from this company valuation? So who is taking, having benefits from this process? The third one is on the typical funding rounds. So you will see that there is not only one time that you raise capital. It could be grants, it could be debt, it could be equity, but what are those rounds? For a company that is going over, let's say, 10 years, how many funding rounds will this company face? What differentiates one funding round from the other funding round? So this is an important question to answer. Then, of course, we're going to cover briefly, I won't go into too much details, as I know some of you have the details. Others, if you don't, will be happy to sit down with you one-on-one. Is what are the key financial statements that we use to define a company valuation? This is one of the dimensions, is to look at the financial statement, and I'll briefly introduce them to you. The most important one is what are the most common valuation methodology. Now you have a number of valuation methodologies. I'm going to focus on 3 because a number of you are either startups or are companies that are small and are in the process of growing. So I will focus on the one that are most applicable to you. And the valuation could be completely a science, but I strongly believe that, as you will see in the quote, it's more of an art. So, but I will share with you these 3 valuation methodologies. And in case you want more detail again on the one-on-one session, I'll be happy to go through it. The other question is, how do I select the best funding source? I have a whole list of these funding sources, being it investors, private equity investors, VC investors in Lebanon. I'm talking Lebanon here. And I also have the list of the international NGOs, and a number of them are providing grants for companies so that you have. And how do I go about selecting the right funding partner for you? So what is the process that you do? It's not about only the money. It's about the values. It's about how you get along together, how you would face crisis together. So this is quite important in terms of a question. And the last one is, what are the key learnings? So what are the takeaways for you on it? So this is the list of questions that came up to my mind yesterday. I wrote them down and trying to have answers around those. I will stop at this point and ask you whether these questions are enough or whether you want to add other questions, because we have the time. We have 3 hours to go through this. So is there any questions that you feel we need to add to this list? And I'll be happy to address it as we go forward. So I'll stop now, and either you could raise your hand or you could write it on the chat in terms you want to chat. If there is any additional questions, I have my chat open, so feel free to use it. I'll give it 30 seconds to see whether there are any additional questions that you want me to address. Very quiet crowds. Sabah al khair. Maybe I should have started with this. Okay, I take it there is no more questions on this, but feel free to, if you want to add questions as we go along, feel free to do this. Yes. Yes, Hiba. Hiba, go ahead. If you have a question, if you don't have a question, then I will ask you to mute the phone.
Yeah, no, but I didn't get from the beginning. Was there something important, or that's it?
No, Hiba, you will get, this is the first slide. So I'm only asking whether there's any questions. Okay.
No,
Hiba, I'll ask you to mute it unless you have a question.
Yeah.
Thank you. Thank you. Okay, look, so no more questions. So I take it this is complete. I'm going to start the, so let me start with the quotes. So the quote is, and you'll see several quotes as we go through. So it's a balancing act. The person in the middle is the entrepreneur, and the entrepreneur has on one side a great idea that he or she is convinced is the best idea that would come up, and on the other side he needs funding, and he needs to juggle spending his time and resources in developing this idea. And it could be any idea. It could be technology related, it could be non-technology related, it could be agriculture, it could be clean tech, it could be any services that you have. So juggling in terms of what do I need to do to take this idea and to develop it into a prototype or an MVP, and then to be able to launch it to my clients. And at the same time, he needs the funds to be able to finance all the different initiatives that he or she are putting together over the next few months. And this balancing act is what typifies the entrepreneur, is spending time on the idea, spending time on building the company, spending time on building the team, and at the same time spending time on finding whatever are the right funding sources and the right advisory services that I need in order to go through what we call the valley of death. The valley of death is this period you go through an accelerators, for those of you who have been through accelerators, but after the accelerators, till you get to venture capitalists, there is a huge gap. And this gap is currently trying to be addressed with an entity called Cedar, and we hope to have others. But this gap exists, and a lot of companies with great ideas end up closing shops because there is no one to hold their hands as they move forward. Okay, so this is quite important that I want to mention on this. So you have Rami's in. Okay, very good. So what is the quote saying? Determining the valuation of a company remains an art and not an exact science. So a lot of you will say, Constantine, we have this valuation methodology, we have discount cash flow, or we have market multiples, and we believe this is the right range. You are partly right. Entrepreneurs and investors must understand that financial projections are the beginning, not the end of a company valuation process. There is so many other aspects beside your financial projections. And for those who have been working with me and on the one-on-one clinics, it's really about so many other, it's the team, it's the idea, it's how much of a competitive differentiation you have. It's about your go-to-market strategy. It's about your validation from a marketing perspective. So all these other elements are as important, if not more important, than just the financial projection that you have. So keep this in mind as we go through. Financial projections are important, will help you develop them, but equally important are the other foundations that I have discussed. Now I'm going to interrupt for a few minutes. I work with Rami. Rami is the general manager for Berytech. He has been also promoting a number of these accelerators. He started with agri-tech, then we have clean tech. It's called today ACT. He also has in charge with Impact Rise. All these are initiatives that had dozens of companies, being it startup, to be able to get the coaching, to get grant funding, and to be able to help them scale. So I'm asking Rami to come in and to give a 3-minute pitch on what agri-tech is offering to the different companies in the ecosystems to help them grow in these difficult times. Rami, can you unmute and share your in-depth knowledge? Thank you, Rami.
Thank you, Constantin. Good morning, everybody. I hope everybody is in good shape and good health. It's a difficult time, but for people with an entrepreneurship mindset, it's also an opportunity for people to look at opportunity in time of crisis and use this time to strategize for a new beginning or a fresh look or an update. So, Constantin, thank you. I'm going to talk to you quickly about Berytech's current programs and where are we looking and the vision where we see things moving. So As you know, currently Berytech is running a number of activities. One of them is Agritech, that's currently in its third batch, focused on innovation in technology, engineering, and food innovation, focused on agri-food value chains from farm to fork. So we're looking at innovative ideas that could change or improve any area of the value chain of agriculture using technology, engineering, or science, or it could be a business model as well. So if you have ideas or you know people that are interested in this, our next batch should start somewhere in October. So please keep a look at it and let us know if you have anybody or you have questions. Please do reach out to any team member of Berytech or at our info, and then we'll get back to you or anybody else who asks for it to do the same. The second exciting program that we have is CleanTech. It's an accelerator focused on innovation in water, wastewater, waste, and energy. And this is hopefully starting in July this year. So with that, we are launching our first series of CleanTech Learning Series, which will happen next Tuesday. And I'm going to put the link in the chat if you're interested to see. And this will happen every Tuesday in the afternoon with 3 different experts and 3 different entrepreneurs sharing some information about how technology, engineering, and business models could make value in these particular sectors. And I think if you all know Lebanon and the region, there's a lot of opportunity in that space where people could make a better environment, but also good money and good economic revival of several sectors and rural communities and beyond. The third program that we have running is Impact Rise, which is a social, scalable entrepreneurship program. It's a business support program supporting a number of social entrepreneurship programs that are growing. And this is running already since late 2019. And we have a number of people, and I think some of the audience that we have here are part of our mentor group or entrepreneurs that we have as well. So it's great to have you guys here as well. So a few other things where Berytech is seeing potential to scale for Lebanon that's important. So we do have also a number of programs that support SMEs. So we have the LED program, which is a technical assistance program for SMEs to scale. We have also COOT, our agri-food innovation cluster that is launched and operational and supporting a number of small, medium, and large firms in Lebanon, collaborate, cooperate, and push innovation and competitive out. And we're seeing a lot of other opportunities where we could play a role, including lobbying for more innovation from university to be commercialized, and so on and so forth. So with that, I end my intervention. There's a lot of information available on the Berytech website. I know it's a lot to see. So in all cases, please do reach out to anybody on the team who could help in making sure that Berytech is there to support you in your journey and help you go further with your entrepreneurship plans and success. Thank you, Constantin.
Thank you, Rami. Appreciated. Just for you to know, Rami is very active also in launching a number of new programs that will be coming in. And hopefully these programs also will provide job opportunities within Berytech and outside Berytech. So, so keep your eyes on the new job opportunities that will come up at Berytech during these difficult times where you have a number of competent people, motivated people that unfortunately don't have the right opportunity to grow. So this is the first. I start with the quotes. Now, what is the introduction here? The purpose of it is to really help entrepreneurs, startups, small, medium-sized enterprises, but also their board of directors or board of advisors to understand the process that they need to raise debt or equity. They feel that this is something that they could get very quickly. In about 2 weeks, in about 4 weeks, we get it. The real process is much longer. And for this, we want to focus on the process and on the tools available to determine the valuation of a company. We will also share examples of company valuation for startup and SMEs. And as now we have Rami speaking, we're going to have other speakers come in and give their perspective on what the process. So this is really holistic. And this, of course, will be followed, as I said, by the one-on-one clinics. For those who are interested, we'll be happy to provide those with you. Now, some of you have seen the slide. I use it because it's a slide that that I developed after my several years working with small, medium-sized enterprises in Africa. These are social enterprises. These are companies that are trying to bridge the gap between those who have access to a good quality life and those who have not, by providing all sorts of services, access to clean water, access to electricity, access to low-cost housing behind it. So we took a number of them through the process. This is a process, a program that has been launched by the Stanford Graduate School of Business. It's called Stanford Seed. This process is spreading around the world. We started in West Africa, moved to East Africa, South Africa. Now we're in India, it's opening Southeast Asia, and hopefully one day we'll get them in Lebanon to cover the Levant area. So this, the finding from it is that you go through these different stages over a period of, it could be as short as 3 to 4 months, it could be as long as 12 months, and you go through different phases, and each of these phases have a template. So you are here, and those who have taken the coaching training have gone through it and have a number of tools available to help other startups or other companies to help them through this process. Now, in this today, I'm going to focus on phase 6 and on phase 7. So I will focus on primarily on the valuation methodology, but I will also discuss about the sources of funding available in Lebanon, because for you, there is no point of telling you how to value your company if you don't know where to get the money from. So I think it's important to cover the different sources of capital. It's also important to be able to cover the selection of the investment partner. Because you want, this is an important decision in your life, in the life of your venture. You want to make sure that you have the right investor on board so as not to get yourself into bad surprises in 2, 3, or 5 years down the road. As it has been happening with a number of companies who probably did not spend as much time in deciding who is the right partner for them. So the focus is going to be really on phase 7, but I will also address phase 6 and phase 8. Now on phase 1, I'm mentioning this. This is in terms of what I, for those who are interested, this is an article that I've published in Nandahar a few months ago, is what are the different criteria that help investors decide whether or not this is the company that they want to invest in. Now, these criteria, I call them the 12 M's for no better word on it, but these criteria are important because these criteria will complement your financial projection. And these criteria are as important as your financial projection in deciding what sort of premium the investor is willing to give your company. So the more, if you want, the more these 12 M's are clearly articulated and clearly implemented, the greater is your chance and the opportunity to be able to get a higher multiple. Because valuation, it's always a range. And this range could be from, I don't know, 1 to 4 million for a company. And the closer, if you want, the higher they're going to be the premium that you get, the more you would have delivered on these elements. I'm not going to go through, not because I've gone through the slides with a number of you, but I just mentioned them quickly for those who are joining for the first time. The first one is we need to understand why you exist. Why are you existing, and what is the pain point that you are solving? So this is, I called it as the mission. It could be mission, vision, by why do you exist? What is the pain point? Is this really a key pain point or not? It's an important question. The second question is how complete and motivated is your management team? And the management team is not only you as the founder or you co-founder, the management team could also be the advisors that you have. Is this a complete team? Is this team competent enough to be able to execute on the plan that you are sharing with the investor? This is a very important because we invest in people. We don't only invest in ideas, we invest in people. We invest in people who have the drive, the motivation, and the commitment to take their companies and overcome all the potential obstacles. And I know we have a huge number of obstacles during the past 6, 7 months on it, but we look at people who have the resilience and who have the passion to be able to grow. So this is the second M. The third M is we look at your model. Does this model make sense? The way you take your products and your services and you deliver them to your customer, is this the most effective way to do it? Is there really going to be traction? Are your customers going to grab it and going to understand it? So we spend time on your model to see whether your model, including production, including sales and distribution and logistics, is a model that holds the ground. So this is the third M. The fourth M is on your market. How big is your market? Now, some of the companies are focusing on a tiny market, but they will be the leader in this market. I've discussed with Hassan yesterday, he's on the call, so I'm mentioning his name. Now, his market is a fairly small market. He is focusing on trying to provide mapping, so you will map to vineyards and show the vineyards what are how efficient is their vineyards. These are the vineyard owners. Are you missing some trees? Do you have some trees that are sick today that needs maintenance? And through an aerial photography of it, you will find out and you get a lot of data. So this service is not available today in Lebanon and not available in the region. It's a very small market because you have a limited number of vineyard owners, but it's a market what if he does it well, he can take a major share of this market. So the size of the market is important, but also your profitable revenue growth potential. This is quite important in terms of the 4M. The fifth M is probably in my mind the most important one with the management team. I called it the mantra. We use it as the competitive differentiator. What makes you unique? What makes you unique today? What makes you unique in 2, 3, 5 years down the road? How can you maintain your uniqueness? Is it because you're first to market? Is it because you have some intellectual property? Is it because you have a patent? Is it because you have a unique way of producing your good or your service? So I need to understand, or any investors needs to understand what makes you unique. And this is quite important. The 6M is on the metrics. I spent time yesterday and the day before only focusing on metrics and milestones with the companies that we're coaching. So we had 10 of those. All we did is we focused what are the key milestones, means what are the key projects that you will be completing over the next 9 months till the end of the year. I need to understand what are these projects. I need to understand when we're going to implement them. I need to understand who is owning it, and I need to review this with you on a monthly basis. I also need to understand your metrics. How many customers are you thinking to get as on board? For this, how many followers do you need? How these followers will migrate into strong leads, and how are these leads going to migrate into a customer? So these conversion metrics and these traffic metrics are critical. I need to understand them. You need to understand them. And we need to understand how expensive is it to get a customer, or how expensive is it to get a serious lead behind it. So these are metrics and milestones are important, but they're useless if you don't have the eighth, which is the monitoring. If I don't monitor this with you on a monthly basis as an investor or potential investor and see how you're delivering it, there is no point of having metrics and milestones. Actually, there is no point of you to go and trying to raise funds, because investors want to see that there is the discipline in monitoring what you said you're going to do, what you said you're going to achieve, and how are you achieving it. This is critical. The ninth one is the intelligent money. Don't go for the money because for money's sake, but go for money, whoever is the money owner, have value to add to your organization. And he might not value you as high as others would do, but he might have the skill set and the network and the capacity to be able to help you grow much faster. And at the end, I'm interested in money when you do your valuation, but I'm mostly interested with investors who can add value to my organization. So spend the time in deciding what is the value that you need. What are the pain points that you are facing? And once you know what are these pain points, you will then be in a better position to understand what is the ideal profile, not only for an investor, but also for an advisor. Okay, so this is the 9th M. The 10th M is on your mitigation plan. So what are the risks? And today we have a full load of risks that we are facing as startup, as small, medium-sized enterprises. A number of them are closing shops. What are those risks and how can we mitigate? You might not have the answer, get the help. Get the help to help you define what are these mitigation plans, because they exist. You know, we've funded between the different accelerator, between Berytech Fund 1, Berytech Fund 2, Speed and others, we funded more than 100 companies. So we know what are the risk areas and we know what are the best practices from one company that could be applied to the other. So reach out to get help in order to help you on this developing the mitigation plan. The 11th M is more what I call emotional intelligence. It's you as a founder, you as the owner of the company and the majority shareholder. You have the maturity to realize that maybe at one point in time, in 3 or 5 years down the road, you might not be. You are the founder. You could be the chairman of your company, but you're not necessarily the best CEO. So do you have what it takes to be the rest CEO? And do you have the maturity to accept the fact that maybe we need to have someone else to take the head of this company? And this maturity is important for investors, because at one point in time, we all reach a level where it's beyond our competence. And you will still be the majority shareholder, but you might not be the CEO. And we look, as investors, always look for people who have this emotional intelligence to accept this fact and work and support whoever is going to be the right CEO for the organization. The last one, which I mentioned earlier, and you will see me from the way I talk to you, from the way when we meet face to face, is you need to have the drive. You need to have the fire in the belly. You need to make sure that no matter how difficult the situation is, and one of the speakers, Sabah, and one of the reasons why I love Sabah and the way she works is, despite all the problems that she has been facing, she's always positive. She is always looking at what is the learning that we could get from the situation and how can we overcome it. And a number of the other speakers, Rami spoke to you, you'll have other speakers. If you look at one common denominator among all of them, is that these people are driven. They're here because they have something to achieve in their life, and they will go and make sure that they accomplish it. So this motivation is transparent. You see it, you feel it, you touch it. You really, and as an investor, we look at understanding what they are. So if you're a bit passive and you're a bit, this is not the best way to attract investors. Okay, I'm stopping. I know that a number of you have seen it, so it's music to your ears because you're repeating it. But these elements are important. Why? Because they are the ones that will make an investor decide to give you a 50% premium on the financial valuation that you have done, and maybe sometimes 100% premium, because they feel that maybe some of these elements you are doing an excellent work. And this is important for you to keep in the back of your mind, being it if you're an investor, if you're a company owner, an entrepreneur, or if you're a coach. These are things that help me guide and work with the dozen of companies that I worked in Africa, in Lebanon, and across the world. Okay, so this is the gap analysis. Now, why do we value companies? Now, we value companies because it's important to determine the price to buy or sell shares. What do I mean? So if today I am the owner of a company and there is an investor that is coming in, this investor will say, how much do you need? He will say, I need $100,000. And the investor would say, what are you going to use it for? And you will say, I need it for A, B, C, and D. And then the third question he will ask is, okay, what is my stake? If I give you the $100,000 in terms of equity, not in terms of grant, but in terms of equity, what do I get in return? 5% of your company, 10% of your company, 20% of your company? So you do the valuation every single time you're going to get a new investor on board, and you will get investors on board. So this is, if you do a good job, people would know about it, and you will need also funds to be able to accelerate your growth, or what we call scale up. And at this point in time, you need to do a valuation of your company. Or if an investor, like for instance, I'm sitting on the investment committee of Berytech Fund 1 and Berytech Fund 2, the Shatara is not only in investing in new companies. The Shatara is in being able to add value to this company and be able to exit at a valuation which is at least 2 or 3 times the initial valuation when we came in. So whenever we sell our shares, we want to value the company, and hopefully there is a multiple between the time we invested in the company and the time we're exiting the company. And this multiple shows how well this company has created value. So whenever you buy or you enter in a company, or whether you exit from this company in 5 years or 7 years down the road, you need to conduct a valuation process. So this is quite critical. You also determine the price of new shares when adding new shareholders. So this is what I meant. So when you have new shareholders that comes in, obtain and maintain financing. Whatever you are, even if you want to raise debt financing, the bankers will always ask you for the valuation of your company. They want to know if they're providing you what is the collateral, because at the end of the day, the collateral is not necessarily the land or the apartment that you have or the house that you have. The collateral is going to be the value of this company. So the banker will be interested to see how your valuation have increased or developed over the past years. So you started with a funding round, you went to another funding round. So the investors would also want to see what is the better to put the screen in presentation mode. Oh, thank you. Wallah, you should have done this long time ago. Thank you. Whoever has, so this is Sabah. Okay. So this is good. Thank you, Sabah. So this is the, so for bankers, you need to put, you need to show them how your value have increased. Now, whenever a number of you is saying, Constantin, I'm losing my people. And this is my biggest concern. Because of the situation, these people end up leaving the country and I cannot retain them. So a number of you are now starting to launch what we call stock ownership plans. So you're providing the key employees with the ability to have shares, maybe 0.5% of the company, 1% of the company, 2% of the company, depending how important these employees are to you. Because when you do this, you will tell them, look, you have these shares, but these shares are provided you stay for at least the next 3 years or next 4 years. So there is now to do an employee stock ownership plan, you need to provide these employees, what is the basis? Today, if I get 0.5%, what does it mean? Is it $5,000? Is it $10,000? Is it $20,000? And in 3 or 4 years down the road, what is the likelihood that this would increase? And to answer this question, you also need to do a valuation of the company so that you provide this information to whoever your share owners are, being it employees or being it investors that you have. And this exercise typically is done at the end of the year, or whenever you have what we call a liquidity event, when you have new investors coming on board. The fifth reason is you, as whoever is the shareholder. For instance, I file in Switzerland, I'm a shareholder in different companies. I have to say, look, I own so much shares in this company, and then the Swiss government or tax authorities will ask me, okay, how much is this worth? So I need to come up with a valuation of my shares, not only in public companies because we know the value, but in private companies where the value is not traded. So you need to identify again at the end of the year, what is the value of my share position in different companies so that I could, and I'll be taxed on it. This is part of the property of the assets that I own, and there's going to be a tax on it because they not only have tax on your profit, they also have tax on your total assets. And the last one is to determine the compensation package. I put CXO, so this could be the CEO, it could be the CFO on it, because what you do is you don't want only to pay a salary, especially during those days where cash is not available. But what I want to do is I want to give you maybe a smaller salary, but I'm going to give you a bonus that will be linked to the value that you create in the company. Or I want to give you stock options that we have. For those, for being it for the value, the bonus will be linked to the value created. This you need to also define valuation. So these are examples of why we need to value companies. I'm going to cover one more and then take questions. So now, interestingly enough, it is not, so escape. First hit, okay, it's not working. Sabah, it was not a good idea. I don't know how to go back. Interesting. Okay. How do I go back? Escape doesn't take it. We'll share. So as a helpful soul, you can stop sharing. Thank you, Hassan. So I stop share. Okay, very good. And then I share again. Okay, thank you, Hassan. So let me share. And I go back to my slides. Okay. Is the slide back?
Yes.
Okay, very good. Thank you. Okay, so Sabah, I won't do the big one. It's okay. Thank you. So why do I value company? I mentioned it. When do I value companies? So this is related to the first one. Every time we complete an equity fundraising event, and you will see, and I'll share with you, you have a valuation which you call pre-money before you raise the funds, and you have a valuation which is post-money after you raise the fund. So this is every time there is new investors coming on board, you will do it. Every time an existing investor is selling his shares, you will do it. Whenever you are we're raising debt financing, they will need to know the value of the company. When you are acquiring, you might be buying a company, or you might be acquired yourself. This you need to have valuation. I mentioned the filing of tax forms, and I mentioned the compensation packages. So these are the reason and why we have why we value company and when we value companies. And typically, who would value the company? At the end, what you do is the board that you have, either advisors or the board of directors, will ask from the CFO to come up with a valuation. So this is either done internally, or if you don't have the expertise, you outsource it. And you have a number of companies that do it. And I'll show you one of the many examples. We have been approached by a number of companies to do their valuation. So these are existing companies, and I will share with you how we go about packaging it and completing the exercise for them. So you either insource it or you outsource it. And when you outsource it, you could, all the auditing companies have all arms that would do valuation. It should normally cost you not a lot, especially if you're a startup. For as an established companies and where there is a lot of work to be done in terms of validation, this could be a month or 2 months worth of work. But most typically in about a week, we could do this valuation and complete it. So this is an exercise that could be done either internally or could be done externally. We at Berytech will be happy to provide the service to you in case you need it. Okay, so now what is the difference between pre-money and post-money? So in pre-money, let's say your company is today has been valued, you just exited the accelerator and you valued at $800,000. So you have your MVP, you had your first customer, and we valued it at 800. Now you have another investor, a venture capital that has decided to put 200K in the company. So if you want the pre-money, is before the investors invest the 200K. So your pre-money valuation is 800K. If the investors decide to put 200K, we are now going through different companies. One of them would be pitching on this. This company has been assessed at about $1.15 million because they had an initial investor who came in. We might be interested as Cedar, this is the Business Angel Association, to add to it 200K. So we will take his pre-money valuation of 1.15 million. We will inject 200K and we come up to a total valuation of 1.35 million. This is a real life case that we have. So what does it mean? Let's say the two owners were Sami and Leah. They each get 50% of the shares of the company. So this is where, then the VC fund came in. Cedars come in and Cedars decide to put 200K. Based on what? On a post-money valuation of 1 million. So it's the 800K, which is the pre-money, plus the 200K is, so the VC fund come with a 20%. What happened to Sami and Leah shares? They're what we call diluted. So their share moves from 50% to 40%. So they get diluted, and we as Cedar will end up having 20% of the company. Now this process of dilution takes place automatically every time we raise fund if the existing shareholders are not able or willing to match the new funds. If they don't match it, they get automatically diluted. They always have the option to match it, but if they don't exercise the option, they will be diluted. Now, why is this important? Because if the company we want to make sure as a VC fund that Sami and Leah are committed. So if we dilute them too much, after second round, after third round of financing, and they find themselves with maybe 5% or 10% of the company, they will not be as committed. So it is critical for the investors to ensure that the founders or co-founders are always having a certain percentage of the company value so that they keep their motivation and they keep their drive in face of whatever uncertainty times that we're having. So you need to understand dilution, and you need to understand that dilution is going to take place every single equity round that you go through. So you need, and the investor wants to make sure that after the third round or fourth round, you still have as founder or co-founders a large share. So in some ways, the valuation of your company will in some ways be affected by the importance for the investor to ensure that after 3 funding rounds, you still have a minimum of 20%. So this, if you go backwards, you will then find out what is the valuation. If I want to keep Sami, in this case, let's say at 20% after 3 rounds. So it's important that you understand what we call the capitalization table, which is how is shareholder equity distributed, pre-money and post-money for each of the funding round. This is very important. Now I'm going to stop here and take your questions. So either you write them down in terms of the text, or you take the unmute and speak in the micro. So let me take whatever I have now in terms of in the chat. Okay, fine. There is no questions. I'm stopping now. Is there any questions at this stage? يا جماعة, first time I hear no questions. والله, is it that clear? أما كلكم عم تتغدوا وعم تتروقوا ومبسوطين وبنسمع صوت كونستانتين بكره الصبح وإن شاء الله كل شيء منيح. Okay, Hiba, all clear to
Constantin?
Yes.
Constantin, I have a question.
Yes, Nada.
Do you think that with the economical crisis in Lebanon or abroad, do you think we have any chance to have an investor?
Yes, you
We're
probably
talking
came.
small scale. We're talking
Yes.
small scale, not 200,000 or even 800,000 or whatsoever.
Yes.
We're talking about small scale investment. Do you think even this angel whatsoever is willing to invest in you know, we are smaller than SME.
I understand, but you're a beautiful company and you're a beautiful soul, so it compensates for the size. By the way, Nada has her company and she produces delicious nuts. These are nuts with special spices, and she is distributing across different outlets behind it. Nada, let me answer and saying why I believe that there is still money available. First, I could tell you on my personal experience. We have closed last month, so this is in the middle of Corona, in the middle of the financial crisis. I have reached out to about 4 or 5 investors. One of the person that I reached out actually is on this call on it. And we have closed a funding round by providing funding to one existing company. These are small amounts. These are not large amounts. This could be amounts of $50,000 or $70,000 that we have to it. So this is one company. So this is in the middle of the crisis. We're still now the answer is why. Why is I believe that these funds are available for different reasons. Is one important reason is today you have a number of people that have money in their banks. Now the money in the bank is paper money because you don't know today that your dollars whether you'll be able to cash them. Actually, you know now as of last week is that you will not be able to cash them in dollars. And the only way to cash them is by bringing new money into the country. So what you want to do is you don't want to wait for either the banks to come or the central bank and to issue statements saying that you will not be able to cash your dollars for the next 3, potentially 5 years. If you want to cash them, you will only cash them in Lebanese pound. Or worst scenario is that you are today a depositor in this bank, Bank ABC, because of the banking crisis that have your funds in the banks or your deposits in the banks are going to be converted into shares of Bank ABC. And this Bank ABC might or might not exist in 3 or 5 years down the road. So you could find yourself with basically zero. So these are real risks that happen. So a number of people are saying, I don't want to take this risk. I want to at least take some of the money out of my banks and being able to invest it, not only in land or in property, but also in companies. So we see business angels who are interested in providing the funds. So Nada, I still am hopeful in terms of the investors. We as seeders are continuing to invest. 2 of the companies that one of the companies that we'll be pitching is a company that has gone through the acceptance and is going through the due diligence on it. So this will be, so these are examples of funds that are available. So don't lose hope, Nada. Just prepare yourself and then be able to reach out to the right investors. Okay, Nada?
Do you have data of investors or how to approach them?
Yes, we do. So this will be, I'm going to have, as part of this, Sheila will be sharing with you the documents. What we do is we have the list of the investors. So these are who are today the investors. Now, some of them are more quiet because they are what we call regulated by Circular 331. This is a central bank, but some of them are non-331. Cedar is an example that is non-331. The different accelerator that Rami has shared with you that are providing grants are non-331. Impact Rise, ACT, which is a combination of Agritech, Beamtech, and other accelerators. They are today providing grants, and today they're providing equity capital to organizations, despite the crisis that we have. And my sense is we're going to get more of these opportunities in the years to come. So we will be sharing this list with you, Neda, and with the other people on this call. Okay?
Okay, thank you.
All right. Okay, let me continue. No other questions? Let me check with technology. No questions on chat. Okay, good, very good. So let's move on. So we are, so what are the typical funding rounds? This is an important question. So, and if you look at this, Neda, it's, you could define it the way you want. This is the way I define it. I called it pre-seed funding. Pre-seed funding is typically the 4 Fs. Now, some of you are familiar with the 3 Fs. So what is the 4th F? So the 4F is the first one is when you start your company, like Neda has done. She and her husband have started it. They've put money from their own pockets. So this is from their own pockets. They might know a friend who is interested in the idea. He puts money. So this is what we call the family and the friends. These are the 2 first Fs. The 3rd F is the founder. So the founder himself is interested, and the more the founders is putting, and this is not necessarily cash. If I look, and Sabah will talk, she's on the call. If I look at Sabah has been working for the past 18 months, and she's getting basically no salary or very little salary. Now this is considered as an investment. This salary is the fact that she has foregone salary for a period of 1.5 years, where she used to make, I don't know, but definitely more than $10,000 a month. This is an investment that she's making, not in cash, but in time, in the time that she's spending on it, the market survey that she has completed, the customer validation that she has done. All this is part of what I call pre-seed funding. So this is the 3rd F, and the 4th F are the fools or the people who are crazy enough to believe in your story, to believe in you, and would like to end it. And these exist. So these are the 4F and accelerators. And you have a number of these accelerators, and you'll have the list of all the accelerators. You're going to have the list of the investors. You will also have the list of the international and local NGOs. So typically, what is this fund? Between $10,000 to $100,000. In most of the cases, if you look at the accelerator, it's between $30,000 to $50,000. Some accelerators outside Lebanon are giving you $100,000, but on average, this is the range that you could get. So this is, and most of the funding here is grants. So this is free money. And we expect to have more grants coming in from international NGOs, provided that you have done your work in terms of preparing yourself for it. The second funding round is the, what I call seed funding. This is when you have the business angels. The business angels, I'll discuss about seeders. I don't know if Noor is on board on it. If not, I will cover it. So business angels are willing to go with larger amounts. So we have seeders is the, Rami and I were part of Seeder 1. I'm part also of Seeder 4 here. And we, every 2 months or every 6 weeks, we get new companies coming and pitching in and trying to raise between $100,000 to maximum they will get is about 500. But in most cases, it's between 100K to 200K. So this is also existing and also existing now in Lebanon. So this is the second funding round. The third funding round, I call it post-seed funding. So this is early stage VCs. IM Capital is an early stage VCs. Here we're looking at 500,000 to about $2 million. So this is the, and there, these also exist. So typically when a company will come to a seed funding, will get 100 to 100K. A year later or 2 years later, they will go to IM Capital. IM Capital is getting non-331 money, and they might be interested in looking at your venture and providing you maybe $500,000 or $1 million in terms of investment. So these are currently existing and currently being funding different companies. The fourth one, we don't see too many of those, are the Series A. We used to have some Series A. Berytech Fund 2 is a typically, not an early stage, but is a typical VC. We have funded several companies above $2 million. So we have funded probably about 10 companies between $2 to $5 million. And in some cases, our $5 million with one company has been matched by another. So we came up with about a $10 million funding. $10 million funding is what we call Series A. The average, I mentioned 2 million to 15 million. The average, if you look at the US data, they're running at $12 million on average for Series A funding. We have done some of them in Lebanon. Leap has done a few, and some of the other VCs have done some. So this is, these are the companies where they are now in the process, not into validating their MVP or developing their prototype or validating the market reach, they're here definitely in a scaling phase. So they are in a scale up, they have the potential, they need large amounts of money to be able to do it. So this is Series A. Series B, you could C or D, so you have different ones. Normally it's more A, B, and C, but these are depending on the size. So it could be from 15 to 30 for Series B, from 30 to 50 or 70 for Series C, and then so these are larger amounts. In Lebanon today, we don't have those. So Series B and Series C, I'm not aware of any deal that has been done on this. You might have some deals. These are done more into larger companies, existing companies, not so much entrepreneurs, but existing companies that are making probably acquisition. And ultimately, the last phase is what we call the initial public offering, or IPO, is when you put your shares on the market. This becomes publicly traded. Now you have market space for small companies, and you have a number of them in the US, in England, in France, in others. And one of the projects that we have been working before the crisis is to develop such a platform here in Lebanon, where we'll be able to trade companies that went through at least 1, 2, 3, potentially 4, and then to list them on the market. So this is, if you want, the ultimate. When your shares become public, then you have anybody that could subscribe to them, and you have responsibility to inform them on how well you do. Actually, you have responsibility throughout these different funding rounds to provide whatever data has been specified in the term sheet or in the shareholder agreement. If I'm putting money, I'm putting money because I need information. I also need information from you, either on a monthly basis or on a quarterly basis. So this is quite important. So these are the different funding rounds that we have. Okay, so in Lebanon, what are the most common one? Definitely one. We have a number of those. We had more, probably than 100 different transactions on this, even more than 200. Seed funding, definitely we had, probably 50 plus. We have post-seed funding, maybe about 20. And Series A funding, probably about 5 to 10. So this is what we have in terms of a summary, what's happening in Lebanon, but also what's happening abroad in terms of the funding round. So to summarize it in a different way, I don't know what this slide, okay. So to summarize it in a different way, you have seed investments that you do. I'm separating pre-seed, seed, and post-seed, Series A and Series B and C, if you want to summarize it. So this is seed investment, is early investment, here to support your MVP, develop your prototype, test your product, get some customer traction. It's typically family, friends, or acquaintances. Accelerators play an important role. You have fewer rules. We're not asking you so much information at this stage. You're still free to manage the way you see best fit. And you have, we take high risk, so we expect high return. So typically, and I'll show you how we measure the return. Series A, as I mentioned, is when you get into a first significant round. So this is more than $2 million. This is from early stage VCs. And this is important because it sets the precedent. There is a certain valuation here, and this valuation will then hopefully increase with time as you go to other equity rounds. There you need to have attorneys, lawyers to help you, and you could have one, or you could have two, or you could have 3 different co-investors in it, and B and C for larger ones. Now, another way to look at it, if you look at the investment journey, is that I've put here the different categories. This is the slides actually I've written when I was with the Agritech people last year on a flip chart, and Joanne was kind enough to put it in a slide. Is you have here the different phases or the different investors. I call it the investment journey. Here there is a high risk when you start with. So these are when you start. This is where you have the highest risk in terms of the company defaulting, maybe in 3, 6, or 12 months down the road, when you're really at the startup phase. As you move along this curve, from family, friends, and fools, to accelerators, to business angels, to VCs, to strategic investors, your risk level goes down. The amount that you raise goes up. Your valuation goes up. But most importantly, your cost of equity. So this is the cost or the expectation in terms of returns from the investors go down. So today, if you are in the IPO, you're publicly rated companies. Now, there have been a major correction over the past months. As you know, there's been a 35% correction on average across all public markets, being it the Dow Jones, the Standard & Poor's 500, and Russell's 2000 and others. What you have is you have on average your expectation over the long term, if you have a publicly quoted company, is about 10%. This is mature company. And as you start your company, we expect the return to be 100% because your default rate is very high, where your default rate when you're a publicly listed company is very small on it. So this curve, this table shows you the different elements in the valuation. So the valuation is bound to increase, providing you're adding value from one phase to the other phase to a third phase on it. Okay, I'm going to stop here and see whether there are any questions. And I also have a drink of water. So any questions? I look at the participants. Questions, chat one. Okay. So Rita, it's clear for Rita. Very good. So no questions?
Yes, I always have a question.
أهلا وسهلا.
But this is not a real question about now what you're saying. I wanted to tell you that after your seminar in Bossa Nova, we never received the how do you say, the charts, the documentation, because
Okay.
now I
Yes.
don't know what to do. Should I take pictures of your slides and keep them because you will never send them?
Yes.
Or will we ever have them? Because now you're teaching us, but then in a week or two,
You'll forget.
Everybody will forget.
Absolutely.
So unless we have a documentation in written that we can go back to, we will never benefit.
Absolutely. Nada, thank you for bringing it up. I'm completely surprised. Sheila definitely will send you because she has been with me on all the conferences that we have. So she has your list. She will send you the survey and she will also send you the documentation. Now she would also follow up. I'm very surprised because this has been managed not by Berytech, but has been managed by Chemonics and USAID. So Sheila, if you can please follow up with Miriam and find out. This is the last one we did as a Bossa Nova hotel where we had about 60 participants there. So we will follow up on it, Nada. Thank you for bringing it up. I was not aware of it, and you're always very helpful in your feedback. So we will.
I want to raise another issue.
Yes.
Unfortunately, Constantin, unfortunately, you see the 60 persons who were there, participants. Yes. I tried to approach one of them to see if we can work together to lead me in marketing tools, in whatsoever.
Yes.
I noticed that nobody helps. Nobody really helps. Yes. The guy gave me some hints and he said, sorry, I cannot help you otherwise.
Yes. Okay.
This proved to me how much the Lebanese are really, intro, and they are never willing to help each other. Yeah. This, you should mention it in your statements, because this is reality, and I'm really sad to say it, but I noticed it. It's been 3 years I'm working in this field, and I never got the help from even my neighbor who is in Suq Tayyib, let's say, standing next to me. And I tell him, look, why don't we share? And no, I send you clients, you send me clients. Never. You know what's never?
Yes. No, Nada, first, I'm going to disagree with you, because just the example of what we're doing today for 3 hours is an example. This is provided free of charge. The one-on-one sessions afterwards are providing free of charge.
This is you. This is you. This is you. This is you.
Yes, but Rami has spoken. I tell you, Rami spends his time sitting down with a number of companies and coaching them on different topics that we have, and a number of the people on the call. So Nada, look, let me take it, come back to me with whatever. We are building this community of people that could advise. We probably maybe not as complete and competent as we would like it to be, but it's a learning process. So we started this process a few months ago, and we will continue on it. So then let's take it offline, and I'll come back to me with your request, and I will be happy to provide any help that you can.
Okay.
Thank you. Any other questions?
Constantin, this is Sabah.
Yes.
I just want to reply to the lady, Nada, I think. Just take a small hint. I had the experience with the Koot cluster, where they are pretty much supportive to each other. I think getting support from anyone just because there is a principle of support in Lebanon is not quite easy. But like the Koot cluster, which is meant to be a cluster to support not only the AgTech community, but also to be supportive among each others. I joined the Koot cluster lately, and I realized that this is a good place to collaborate. So they were giving ideas to each others, how to deal with the economic situation and how to deal with the payment, the banks, all of these things. And ideas were wonderful.
Yes, thank you, Sabah. And Rami mentioned Coots, and we are looking at creating other sort of network. You have another example, which is the Family Business Network. Lina is a friend of mine. She's running it. I also delivered workshop to them. This is another network. These are the heads of the family businesses in Lebanon on it. So the more you're part of these networks, and these are networks where you share common challenges and common pain points, the more likely you are to share best practices. But always surround yourself with people, not only that you trust, but people that are competent. So you could have a person that volunteers, and if at the end of the day there is no added value, then there is then we need to make sure that the people have more value added that could provide. So so this is great. Thank you. I need to move on this. So now we're going to get to the topics that I'll go quickly through it. I'm not going to spend too much time. What are the financial statements that we need in order to be able to define value? So this is important because you need to have projections. And these three statements are fairly clear. One we call the balance sheet. It's basically what you own and what you owe. So this is the balance sheet. And this is a snapshot typically at the end of the year. And we've gone through it with a number of you already. The second statement is your income statement. The income statement is over a period of time, let's say 1 year, is how much money have you generated and what were the expenses related to this revenue and whether you made a profit or you made a loss. We expect most of the companies that start for the first 1, 2, 3 years will make losses behind it. And the last one, which is critical, is the cash flow statement. Now, why is it critical? Because this is the one. You could have a strong balance sheet, a strong income statement, but if you don't have enough cash to meet your obligation, you might be bankrupt, although you have a very strong balance sheet and a very strong income statement. So this is an important one to mention in terms of the statement. Now, instead of talking about it, I'm going to show you examples of it as we just check. I cannot read the chat messages. Oh, this is interesting. Okay, on it. So these are the three statements. Now, why are those important? Because you, in evaluation process, this is the second quote, you need to know your numbers. And most importantly, you need to know your assumptions. When I sit down one-on-one with a lot of the clinics, I don't talk about the numbers. I focus on the assumptions. What are the assumptions that you have made? Are these assumptions realistic? Do they make sense? Can we validate them outside with other companies doing similar things? And this is one part, this is critical, is the validation of the assumptions. It is a fundamental precept of company valuation. So if you don't know your numbers and you don't know your assumptions and you're not in a position to defend your assumptions and your numbers, you are not going to be on the right footing. So you like it or you don't like it, you need to be able to speak this language. And if you don't know how to speak it, get someone who can speak the language and defend it on your part. This is very important in evaluation process. Okay, so what is the balance sheet? A balance sheet is a financial snapshot. So taking at a point in time of all the assets the company owns. So these assets could be what? Cash in the banks, if you have any. It could be inventory. A number of you have inventories. It could be your receivables. These are customers that owe you money. And some of the existing companies, one of their major problems is the receivables because they cannot collect them. It could also be property, plant, and equipment. You need to have a production machinery. You have, I don't know, you have drones to be able to provide your services. So this is part of these assets. And what are the liabilities? Most importantly are your suppliers, how much you owe them. We call it accounts payable. Do you own the banks or somebody or a business angels? Maybe you own him debt. And the difference between your assets and your liabilities is what we call shareholder equity, which is basically the book value. So this is one way of determining the accounting value of a company. You take your total assets, you subtract from it liability, and you get shareholder equity. And on shareholder equity, hopefully it's positive, we will add a premium based on what? Based on the 12 M's that I shared with you. So the best you are on these 12 M's, the more I'm willing to give you a surplus on the shareholder equity that we raise. So this is one simple way to be able to measure. So the balance sheet. The second one is the income and or profit and loss statement. This is simple. It's your revenue minus your expenses that you have, and this is over a year. So a year, it could be over a quarter, but typically we do it over a quarter or over a year. And most of the companies that we work with, even if they don't have actual, they have projected. And we help them put together their balance sheet. We help them put together their income and profit loss statement. And I'll show you in a couple of minutes an example of one. The last one is the cash flow statement, which in my mind is the most important one. Whenever I talk with companies, I always end up focusing on their cash flow statement. How much cash do they have now? How much cash are they burning every month? What is going to be the cash sources coming in, either from investors, business angels, family or friends, or from customers? How much cash is going to be used? So we have the sources of funds, we have the users of funds, and I want to know on a monthly basis, what is our cash balance? And this cash could come from three buckets. So it's either operation, which is basically the cost of running your business, or it could be your investments. You're investing into production machinery. You're investing into an IT platform. You're investing into different ways that you in an ERP system. So this could be investments, or it could be divestments. If you have some assets that you're selling, it's cash in from investments. If you are investing in new equipment, it's cash out. And then the last one is from financing. So how much funds are you able to generate, either from investors or from bankers or from other funding sources? It could be grants, donations. This will be the cash flow from financing, or you're repaying your debt or you're on it. So this is cash out. So these are the three buckets of cash. Now, instead of talking, I'm going to show you an example. So this is one of the company. It's so this is there any questions at this stage? I'm just checking the participants. No question. This is good. So let me show you an example. So we have share. Let me see where it is. Okay, this is an example. This is either Muhammad or Ramzi will be. It's an old one, so I share it. It's not so much the number because the number have changed already, but this is an example of an income statement. This is a company. This company is providing water filter. You will have a small presentation from the company in terms of the process that they use. They have successfully raised funds. They raised funds from Flat 6 Lab, an accelerator. They got an injections both in terms of in-kind cash of about $115,000 behind it. And they produce water filters that are allowing you to have access today to usable water, but in hopefully by the end of the summer to drinkable water. So you put it on your tap, you put it on a bottle, you put it on your shower, and you are able to filter all the elements that you have. They have sold to NGOs. They got a big order from Oxfam, and they'll be getting, and they've sold also to household owners like yourself. So this is their revenue. They're projected for 2020, 2021, 2022, and 2023. They have also put the cost of producing these filters. Roughly, it costs them about 50% to produce the filters. Let me check. There is a question. So what we have, Ramzi, you're online. Very good. Ramzi, I'm talking on your behalf, and then I'll ask you to come. So this is more in sharing with them a typical financial statement. So so this is what you have. They have. So this is the first bucket of goods. How much does it cost to produce the goods, to produce the filters? They're using 3D printing today. They'll be using injection mold in 2022. This is where you see that their gross profit as a percentage of their revenue is growing in 2022 and 2023 because they'll be changing their production. And this is their list, all their expenses. So those that are listed, the first one are their expenses. The other one here are more machinery, it's certification, it's vehicle, it's mold. So these could be either expense or they could be capitalized on it. And then the summation of the two is their income. So they will be losing money the first year, no problem. They'll be losing money the second year, even more, no problem. But as long as they're growing, we know that they will be generating profit in 2022 and in 2023. This is a typical projections in terms of income statement. Now, if you don't know how to do it, we will help you do it. We will sit down, we'll set up the assumptions, and we'll help you complete this process. Okay, so this is quite important on this. I'm going to show you the most important one that we have. So on this case, I will be doing another share. So what do? I go back, new share. Okay, new share, and I will share another one. Okay, is this the other one? Yes. Okay, this is the other one, which is the cash flow. The cash flow is the most important statements that you need to go through. And I shared with you why. So we did the same exercise, and it's different from the income statements. On this case, we looked at the different types of cash. We look at cash from operation, we look at cash from investments, and we look at cash from financing. So if you look at the cash, and we have the cash at the beginning of the year, and we have the cash at the end of the year. So if you look at 2020, they will be generating cash from their customers for about $22,000. They have a number of expenses, primarily wages, but also some of the cost of goods sold that they need behind it, and they have some R&D that they're putting in. And then they have some cash, so their net cash from operation is negative $35,000 for this year. They also will be spending and investing into building their coming up with patents. So they need IP. They need to have certification to be able to export. They need machinery, the 3D printer. They need to have some office equipment. So there is cash from investing for about $20,000. And then there is financing that they will raise. So expectation is that from Cedar, that they would raise 125, they might raise more. I've talked to Flat Six Lab, they are willing to match on it, and they have also got from Bada'el, which is a grant in this case, this is the funding that they have received. So we have now the total situation, cash flow from operation, CFFO, cash flow from investments that we have, and cash flow from financing. And what is this giving us? It gives us, if they didn't get the cash, it gives us how much money they need. So this is the first information, is how much money they need, which is the summation of the cash gaps that they will have if we didn't get the funding from Flat Six Lab on Cedars, and what is the way to be able to bridge this gap. So cash flow forecasting is critical, and this is not only defining the gaps and defining the ways to be able to address the gaps, but most importantly, this is one of the valuation methods where we look at the discounting of your cash flow forecast. And this defines what the value of your company is. So if you don't master it, sit down with me, sit down with Joel, sit down with whoever is your financial advisor, and we will take you through it. And to that, the same way I sat down with Ramzi, who is on board behind it, and I will, and we sat down maybe about 4 or 5 different times over the past 4 or 5 months. And every time we change assumptions, because assumptions will be changed, and this is reflected. Now, and this is not the final version that I'm sharing with you. He had another version with the final version, and he'll be pitching at 4 o'clock this afternoon in front of the due diligence committee for Cedars on this. So this is real life examples of cash flow for companies that are startups, very little revenue, as you see, $22,000 for this year on it. So this is, now let me see whether there is a question. Muhammad to me, hello Constantin. I'm here. Okay, very good, excellent. So we have both Muhammad and Ramzi. Ramzi and Muhammad are the co-founders. So what I'm going to do now is I'm going to stop. So this is an important part in the evaluation, is you need to be on top of your financial numbers. And most importantly, you need to be on top of your assumptions. And we will size you and we will value you knowing how realistic are these assumptions. The more you can validate them. So if they're coming up with the customers for next year for 172,000. So we have been spending yesterday also time with their marketing guru. So trying to understand how much traffic they will get on their platform, how much leads will be generated, what will be the conversion rate. If we put $5,000 or $10,000, what is going to be the traffic, what will be the conversion rate from traffic to customers, so as to be able to validate. So how much do we need by the end of the year? So we will have figures in terms of metrics, and how much do we need to spend next year so as to be able to get enough leads to generate this. So this is how you validate those numbers. It's not only numbers coming out of the sky, but these are numbers based on marketing activities, being it brand building, being it digital marketing, being it lead generation, that are generating leads, and these leads will convert into customers, and these customers will be placing orders. So this is quite important that you are on top of those numbers. Now I'm stopping here, and I'm going to go back to, and I'll ask Muhammad. Muhammad, unmute yourself, or Ramzi, whoever. I would like you to share your experience. You went through one funding round with Flat 6 Lab. Share a bit who you are as a company, a bit of the process that you went into your first funding round, and also the lessons that you have, because you got your funding round in September. So what are the lessons that you want to share with the audience? Thank you.
Hello, Constantin. Hello, everybody. I hope you're all doing well. First of all, thank you for Constantin for inviting us and having us to talk here. It's really a pleasure. So to start a bit about myself, my name is Mohammed Fakhruddin. I'm the co-founder and CEO of Clean2O. And we design products that make water safe anytime, anywhere. We work on a range of products. Currently, we have one product in the market, which is the world's first 3D printed tap water filter. It is a device that can be connected to your conventional faucet or tap in your kitchen or toilet in order to disinfect the water from any contaminants and heavy metals, mostly focusing on chlorine, lead, arsenic, lithium, beryllium, boron, and other contaminants that can be harmful to our human body and can reside into our kidneys and our systems. We do this through combining mesh and granular activated carbon with a sand filter. These are special kinds of activated carbon that we've engineered in order for us to work with the quality of water that we have here in Lebanon and disinfect the water from any contaminants, to use it for cooking your daily meals and making coffee, for washing your fruits and vegetables, for washing your face and brushing your teeth, and for any household use for families. We are also working on an antibacterial model where we are turning tap water to become even drinkable, and we've had promising results. We are working with غرفة الصناعة والتجارة, the Chamber of Commerce, in order to conduct these tests, and the results are promising. In brief, this is what Clean2O does, more or less. We also work on currently researching and working on other products in order for us to expand our range of products and fulfill the need of different customer segments and different market segments. This is a small brief about the company and what we do. In terms of valuation and the process of valuation, we got an investment from Flat 6 Labs for $115,000 in exchange for 10% equity of our company, which values our company for $1.15 million. Of course, there has been a discussion with Flat 6 Labs before agreeing to this fee. Their pre-money valuation was $1.02 million, and that was based on the idea that we're working on the team, on the work that we've done before we got the investment. Once we got the investment, they valued the company. The post-money valuation was around $1.15 million, and that was back in September. We got the investment. During the time period where we got the actual money, it took quite a while. But after we got the money, what we did with this money was basically we had deliverables for Flat 6 Labs that we tried to fulfill, which included launching the product into the market, start selling, improve the product in quality and in shape and in color and all of that. We also filed our provisional patent, and we got the provisional patent pending. we also were asked to work on more ideas and prototypes in order to diversify, and that's what we did. Now, once we got the deal from Flat 6 Labs, we studied the deal, and we took advices and asked a couple of people in the field about the deal, how fair it is. We talked about the shareholders agreement and what are the duties that are required from us and from Flat 6 Labs, their duties required towards us. And based on that is how we accepted the deal. In terms of financial projections, it is basically we have an estimated revenue of around $500,000 at the end of 2022. So in terms of our current situation, we had to multiply this $500,000 by 3 or 4 in order to find the exact valuation of the company in the coming months, for the year 2020, and we estimate it to be around $1.5 to $2 million. Normally, I believe, if I'm not mistaken, normally these are multiplied by more than 3 or 4. But in our situation, since we are not generating huge sales right now, these are the values that we took into consideration. So right now we are on our second round of investment with Cedars, and we're going right now through the due diligence in order to basically obtain an investment that's sizable enough for us to expand further. We plan to expand to expand further product ranges, increase our production capacity, and expand to other markets. And we have a lot of potential markets that we have a couple of customers and a couple of clients and that are really interested in bringing this technology out there. So in our basic estimate, we believe that as our pre-money for our next investment round, our current valuation is $1.15 million. We believe that for a post-money valuation after we get the investment, it would be around $1.6, $1.7 million in terms of valuation. I believe this is the information that I have about the valuation and about the company, and I'd be more than happy to take any questions or any suggestions or any comments from anyone. Thank you very much.
Muhammad, thank you. It's appreciated. What I have a question is,
yes.
And I know I'm in some ways conflicting because at the same time I'm your advisor and at the same time I'm a member of the due diligence team of Cedar on it. I'm interested in your sharing your perspective. So we went through, we started the due diligence process with you about 2-3 weeks ago. Can you share some of the learning with the audience on what is this due diligence process forcing you to do?
Yes, of course. So the due diligence process is to give a small description on how it goes. There's a group of people who are on a due diligence team, and they basically evaluate and decide on certain deliverables or things that we are working on, and go with us along the way in order to understand the business, understand how it works, and who's running it, and validate all the claims and all the assumptions that we are taking in consideration. The procedure has been, a personal opinion, the procedure has been very pleasant, to be honest. I believe that it's been very beneficial to us also because it encouraged us and helped us to look into things in more detail and look into things further. So what happens during the due diligence process, if I'm not, I believe that every few weeks or every week or so we meet up in order to discuss certain issues or certain topics or certain points that we wanted to tackle, or certain let's say situations or scenarios that anyone on the due diligence team has in terms of into or in terms of how it works. And we're talking things about the market access strategy, for example. We're talking about the financials. We're talking about, for example, patents and IPs, hardware strategy, such as in our case. We're talking about sales. We're talking about numbers, projections, and basically everything is talked about in order to validate in order to see that the assumptions that we're taking in consideration are logical and reasonable, and in order to see that everything that we have done and we have claimed is well, basically true. So in overall, the due diligence process has been actually really great. We have, as you know, we have a due diligence meeting today, and we're actually looking forward to it.
Very good. Thank you. You have one question, Muhammad.
Yes.
I think Ramzi have answered it. On the filters, are they supposed to be used on water in tanks or water coming directly from the water company?
Yes. So the filters should be connected to the tap. So not on the tank itself, but on the faucet that's inside your kitchen or toilet. Therefore, you connect it and then you simply open the water and it runs regularly, but it's more cleaner.
Very good. Hamid, thank you. Now,
thank you very much.
note, thank you for taking the time, you and Ramzi, on it. Now, why is this important? Because exactly those types of companies and ideas that we're looking for. So if you look at it, both of them, I've been working with them for the past 7-8 months, both are very passionate about what they do. They come up with an innovative idea. So they are filing for a patent for this innovative idea. They're addressing a real, what I call social need. Access to clean water is going to be critical, not only in Lebanon, but across the region that we have. So they have social impact. They have technology. It's an entrepreneurial spirit that they have. They have the passion behind it. This is exactly the profile of the company that we look for and that we're trying to help grow and sustain in Lebanon. And you have examples like this across the number accelerators that we have. So I appreciate both of you's presence. I'll check. There is probably a couple of questions. This is Ghost. What is the price of the filter? I will answer it, Steve. If you buy it, if you buy it in bulk with 3, because you will need it, you need every filter lasts for 4 months. If you buy 3, you'll pay $60. If you're interested in placing the order, I'll share with you Ramzi and Muhammad's details. They'll be happy to deliver it at home. So it's $60 for 3 filters, and normally this will take you for a full year. So this is the price. Muhammad, correct me if I'm wrong.
Yes, Constantin, you're absolutely correct. It costs $60 for 3 filters, which lasts you for up to a year, compared to the amount of money that a lot of households are paying, where they're buying bottled water in order to be used for their household use, for cooking, for washing fruits and vegetables, and all of that.
Very good. And Patricia asked the question, are there no similar filters imported? Do you want to answer it, Hamad?
Yes, I'd like to answer that. There are filters, of course, that are imported. One of the main selling points in our filters, one of the main points that we are selling for in our filters is that the water, the components that we are using are customized to the quality of water that we have here in Lebanon. So filters that are being shipped from abroad are normally customized in order to modify taste and smell in water. The filters such as Berytech and whatnot. This is because the water that's being provided to their taps is already drinkable and safe. It has no contaminants, it has no heavy metals. So there's only an adjustment of taste and smell of the water, more or less. Therefore, they are effective and to a certain extent, but not as effective to remove heavy metals specifically. So we're talking about lead, we're talking about iron, we're talking about arsenic, about chlorine, about calcium, and all of those things, which do not work efficiently compared to what we are working on.
Very good. I'm going to close the question now. Muhammad, Ramzi, good luck for this afternoon. Look forward to being with the 2 of you. I'm sure it would go well. And always a pleasure to share this journey with both of you. So
Thank you very much.
It's really a pleasure. Thank you.
Thank you.
I'm going to now shift. I've mentioned we're going to have 2 speakers. I'm asking both of them to share their experience. I've mentioned, of course, what Rami is doing with the team in terms of the different accelerators. So we have, we mentioned the impact rise for social enterprise, agri-tech for the agriculture sector, clean tech for clean technology, waste management, and others. We also have other accelerators. One of the first one on the market is Speed. Speed was, and the general manager is Sami. Sami is with us on the call. I'm going to ask Sami to spend a few minutes, 3-5 minutes max, to describe a bit what Speed is, how much companies went through Speed, and what is the learning process behind it. Sami, if you could unmute and share with the team, it would be greatly appreciated. Thank you.
Yes, sure, my pleasure. Good morning, everyone, and glad to see that many people on the call this morning. Shows great interest in this. So, and great content, Constantin, as always. Like I've been following it from the beginning today, and love the progression. So thank you for that. And thank you for giving me the opportunity to share with everyone also what SPEED has been doing, and hopefully that will be helpful for everyone who might need some of our support. So at SPEED, we are the support network that empowers founders to build successful startups. And we have been doing this since 2015. We have invested so far in 42 startups at the early stage. And out of these startups, around 17 plus rounds of follow-on investment have happened. And a total of $4.6 million has been raised. And up until October 17, we had created also around 600 jobs in the local economy. Now, after October 17, numbers are still unclear what's going to remain or not, but hopefully we're helping all of them to thrive through this period and hopefully survive. What do we do at SPEED? So we accelerate and support startups at the early stage, technology startups who are in the software field. We run 2 cycles a year. In each cycle, we accelerate up to 8 startups, and we have a program of 3 months acceleration, and during which we provide a lot of support for startups on everything they need. So we provide workshops on everything from team formation, legal, product development, user experience, user interface, marketing, legal, sales, you name it. So anything that startup needs, they can go through it in our program. And eventually, we start with a launch event to introduce the startups to the market. And then they go through the 3 months. And at the end, there is a demo day during which they also present what they have developed, given $30K in cash and $30K in in-kind services to the investors, the ecosystem, and the local players. We have in-house coaching, so we're a team of people who are able to support the startup directly. And we also have of a first layer of mentors of around 100 plus mentors. Of course, Constantin is one of them, and we're thankful for all his support to the startups. He also delivered workshops for our own startups at SPEED. And the other thing we do is that we, at the end of the program, we let the startups apply to a program that we have partnered with Lebanon in Silicon Valley to provide our startups. So we realized with time that the local market and a little bit what people see here locally is sometimes a bit limiting. It's sometimes not a huge market, and they need to see things at a global scale. That's why we have tailored a program for those that we fully sponsor to send these startups to Silicon Valley and experience things at a global scale and at the cutting edge of technology. So that program, startups get directed to it, and they also go run through some local partners there. Last time we did it, it was with Draper University, which was founded by Tim Draper, a billionaire and major entrepreneur in Silicon Valley. And actually 80 startups participated in the last program. And usually they choose one of them to get the funding. And luckily this time they chose the SPEED startup, part of the 4 startups we sent there to get the funding. So we have one of our startups who got invested in by Tim Draper in Silicon Valley. And that's something like to be proud of today. And funny enough, this funding came in last week. So even during this whole crisis and everything winning and answering some of the other people's questions, that there's still funding. I think yes, if you're able to reach to the right players and to kind of have the right story, you'll get the funding. Now, one other thing also we realized at SPEED, part of our journey, is that you cannot do all of this alone. And that's why originally we've been partners with many players from day one. Berytech has been one of the founding partners with us as well. And we had also BD as a partner in Beirut, who helped us along the way to provide the startups with hosting, additional support, and all the kind of services they do. Now, the other partnerships we built were more international at a large scale. So Lebanon is one that I mentioned, and what they help us in the Silicon Valley Immersion Program. But we also, in 2018, we became the first partner to sign a partnership with Techstars. So Techstars actually tailored a bit that for us. And since then, they started allowing other accelerators in the world to kind of venture into that partnership. And with that partnership, it allows us also to expand our network and allow us to refer SPEED startups to the 52 Techstars programs around the world, so that they can eventually get access to new markets, to more in-depth expertise, additional financing, and all the kind of things that Techstars can provide that at the local scale, sometimes we're not able to help the startups. We also became a member of the GAN around 4 years ago, and that's the Global Accelerator Network. It also has a huge network of 110 accelerators around the world, and gives us access to their mentors, their advisors, their investors, and in addition to around $1 million in perks. These perks include Amazon Web Services, Google Cloud, HubSpot, SendGrid, you name it. One other and also important kind of partnership we built with time was SeedStars. So SeedStars is a Swiss entity. Actually, today they're having their global summit and they're doing it online. It's based in Switzerland and they cover more than 80 emerging markets. Now, we've been their ambassadors for the last 3 years in Lebanon, and we help also organize the local event in which we get the startups to pitch to them, and eventually one of them gets selected and goes to Switzerland. They used to go in person, but now they're pitching online. But still they're committed to the investment they have, and that's another funding opportunity for people. They invest around 500,000 euros in one startup every year from those countries. And in 2018, we brought to Lebanon as well the MENA Summit with them. That's 15 countries coming to Lebanon and pitching their startups in Beirut and bringing with them their investors, their mentors, and all these kind of things. Why I think these are important, and that's something for everyone to keep in mind on this call. So part of helping the startups, there is no like silver bullet of like telling people that they should do this and that's going to work, and that's, I hope, not the kind of support that entrepreneurs are looking for. Part of building a startup, it's a long journey. It requires going through multiple things and working in multiple aspects to build the startups, and one of them is to go and talk to your customers, go to talk to advisors and mentors. And the more you're able to connect with mentors and talk to them, similar to what Constantin is doing today again, and to many of the other mentors we have, you collect what I personally call the wisdom of the crowd. And that's where you can understand better part of the crowd, what they're telling you, and that works or does not work for you. And that's where you develop also your own vision and image of how things could evolve in the right direction. So that's a little bit also the reason why all this network and all these kind of activities are important. Now, you might be asking me what we're doing today and in the current situation. I think that would be a very valid and important question. So Speed has been transforming the program since, I would say, the economic crisis in Lebanon, and also kind of shifting a little bit of support to become more fluid instead of it being very strict. So we're looking to support startups anytime they come our way. We're doing this in a couple of ways, but we have not announced those yet because, of course, now we have another problem, which is Corona. But I think that pushed us also to transform things in even a different way. So other than us being flexible about how we help the startups and when we do so, and keeping our door open as always, we're also looking right now of adding on top of that a layer where we can do things remotely, virtually, and online. And we're currently like in the middle of looking at some ways of delivering on that and moving forward in the direction, at least on the short term, until the world becomes normal again, let's say. So that's on a high level. I don't know if you have any kind of more detailed question or something more specific you want to learn about, or Constantin, if you want me to share something I have not covered, please do let me know. And, yeah.
Sami, you've done a great job. I think you have a wonderful organization. You've contributed definitely to the ecosystem. You were the first player in terms of accelerator. Really appreciate your being with us today, and wish you all the best. I know these are difficult times, and hopefully there's going to be some task force working, because we have funded in total about 350 companies over the past 4 or 5 years. So what can we do now to be able to sustain them and help them grow through this crisis? As you know, a number of European governments are contributing in order to be able to sustain those companies that have been created. Is there any effort from a government perspective to do this? Are you aware of any that you would like to share with us? And what do we need to do? Is there any task force or committee working on trying to reduce the default rate of these companies that we have funded?
From a government perspective, I think I've been asked this question a couple of times this week. And my answer, I'll be very blunt and transparent. I think the government has bigger and more major issues to take care of. I'm not saying that the economy is not one of them, and that the startups and the companies who are building great things are not one of them. But I'm guessing we don't get to the top, let's say, three priorities right now with what's happening everywhere in the economy in Lebanon. So that said, it's mostly private initiatives, and we're trying to pool all kind of resources we can to help the startups accordingly. I have not heard of anything that the government is doing. Unless anyone on this call knows of something, please do share it. We'd love to know more what it is. But I would say it's mostly happening on the level of private support, kind of helping people get maybe sometimes outside of the country and get revenues internationally, connecting them with new players, private funding. Maybe sometimes lawyers are helping some people because they need to pay salaries and to do some also R&D and doing their back kitchen in Beirut. They would still be able to use dollar money, and that's where some people who have money locked in the banks are happy to invest into these startups and help them in this situation. And that's something we're actually still working on. So we were putting together a micro fund at Speed, a very, very small fund that would invest tickets of 100Ks. And this is still ongoing right now. And we hope that we'll be able to close it and secure it soon so that we can still support up to 15 startups with 100K each one of them. So yeah,
this is excellent news. And in case you need help on the mentoring, coaching, investment committee, I'll be more than happy to contribute, as you know.
Sure, definitely.
I'm going to cut it now because we're running short of time. Appreciate very much, Sami, your contribution.
Definitely.
Good luck also with the new fund, and keep us posted. Thank you so much.
For sure. Thank you. Thank you.
Thank you. I'm going to take I'm going to ask another before I continue, so that it's important for you to get a perspective from all the other potential funding sources that we have. So Speed is one, Agritech, Berytech, Clean Tech that we have, Impact Rise. Now we have another one that is also present. It's Flat 6 Lab. So for instance, Clean2O, who went through the presentation earlier, was funded by Flat 6 Lab. They got some grants coming from Bada'il and Oxfam, but also they got some equity injection coming from Flat 6 Lab. Danny is the investment manager in Flat 6 Lab. He was formerly, we worked together in Berytech Fund 2. He was part also of preparing all the document to the investment committee of Berytech Fund 2. Danny is on board. I'm going to ask him to unmute himself and take 3 times to present briefly what Flat 6 Lab is doing, how many companies they've funded already, and what are their plans moving forward. Danny?
Hi, good morning, everyone. Hello?
Yes, we all hear you, Danny. Go ahead.
Yes, hi everyone. Hi, Constantin. Thank you for the invitation. Hi, everyone. Hope everyone is safe during these tough times. So I will do a quick introduction about Flat 6 Labs Beirut. So my name is Danny Maadouli. I'm the managing partner of Flat 6 Labs Beirut office. So Flat 6 Labs technically started around 10 years ago by 3 Egyptian founders. So it's headquartered in Cairo. And then they expanded into the region. They opened office in Tunis and Bahrain, in Jeddah, Abu Dhabi, and Beirut. So in Beirut, we started back in early 2018. We're a $20 million fund. We're compliant, 331 compliant with the central bank. So we raised the funds from 10 Lebanese banks. So far in Beirut, we've ran. So we have two parts. We have the accelerator program. We run 2 cycles per year. And each cycle, we have between 8 to 10 startups. We invest between around 100K in each startup for around the 10% equity. And we have the second program, I would call it, which is a follow-on funding and the pre-Series A ticket. For the startups that join our accelerator program, so it's between 4 and 6 months program. After they graduate from our accelerator program, if they secure any external funding from external investors, Flat 6 Labs are willing to match the funding up to $200,000. And the pre-Series A ticket, so for any Lebanese startup, they can apply to Flat 6 Labs. Definitely, they go through, I will explain it in a bit, through a certain process, and we can invest up to 500K. For the accelerator program, so as I mentioned, we have 2 cycles per year, and technically we invest in the sectors in the knowledge economy. So, for example, in anything related to digital and media and content gaming, ad tech, health tech, green tech, fintech, so any type of technology startup. So technically, as I mentioned, we have the seed investments for the accelerator program, the follow-on funding, and the direct investment. So far, we've invested in 34 startups. So we had four cycles we've invested in. We were running our 5th cycle back in October, but due to the to the October 2019 events, we had to postpone our cycles. It's been a very quite challenging time these days. I mean, especially to operate in Lebanon. We're trying to definitely to stay engaged with our existing portfolio companies. We're trying to support them as much as we can by, especially now with the Corona situation, with doing webinars. We're trying to do assessment on our portfolio companies, which startups can make it, which one need our support. And the pre-Corona crisis, also the kind of support that we provide our startups is that we connect them with our regional offices. So, for example, we all know that Lebanon is a small country, and most of startups they use Lebanon as a pilot phase for their product. So once they launch their product, we try to send them and connect them with our regional offices. For example, if some of the startups they need to penetrate the Egyptian market, for example, we connect them with our region, with our headquarters in Egypt. They spend some time in Cairo. They connect them to the key players in the market, in their industry specifically. So we also provide our startups with these kind of support. Also, so far we've invested in one pre-Series A startup, and we're closing on a second one. So technically, this is what the type of investments that we do in Beirut. Technically, how the accelerator program ran in Lebanon. So we select 20 startups out of the 100 of applications that we receive. These 20 startups, we do like a 2 weeks, around 2 weeks boot camp. And then they get invited to a selection committee. They come, they pitch their idea. And then we select around, as I mentioned previously, between 8 and 10 startups. We select the top one to join our accelerator program for 4 months. And then they graduate after 4 months and they receive around 100K investment. So technically, this is in brief what we do. And I apologize, Constantin, but I have a call at 11.
Yeah, no problem.
I have to make
appreciated.
I have to make it as quick as possible.
Yeah, no, it's Danny, it's fine. Really appreciate your time. What I'll be doing is I'll be sharing with the audience your contact detail, Sammy's also contact detail for speed, you know, the Berytech accelerator contact details, so they have a chance to be able to reach out to you directly and ask you questions based on the needs of their startups. But you could expect a number of those on the call today are startups that are going through other accelerators, Agritech and others, and these will be potential deals for you. So thank you, Danny. Good luck with the call, and thank you for joining us.
Thank you, Constantin. Thank you, everyone.
Yalla, all the best.
Bye.
Okay,
Thank
I'm
you.
going to continue on this. Unfortunately, we're running a bit short of time. We have an hour to go. We spent 2 hours already. Time flies. I have even some speakers that were supposed to speak, but given the time constraints, I will invite them during the next one. So Al-Fanar is one of them. Al-Fanar is providing grants, but will be providing equity investment also. So you have a number of players today in the current crisis that are present, that are active, that are providing not only coaching and advisory help, but also providing funding. So it's important for you to know this. It's important for you also to spread the news around the other entrepreneurs that you know, and hopefully they could join us in the other webinars that we will be organizing. Joanna Abi Abdallah is also on the call. She's the one that coordinates all these Finance Fridays, and there will be, you'll be informed. We have all your contact details on the future ones that are coming up. So let me now continue. So we shared the importance of financial planning. So this is important, focusing on cash flow. I showed you an example. Every single one of these accelerators will help you put it together and will help you define what your valuation is going to be. But these forecasts also, as I show in this slide, are also used for if you want to apply for a credit loan, they do some ratio analysis. If you want to compare yourself to others, once you start to have some data on your cash flow or your revenue projections, we will have some competitive benchmarking, comparing you to other companies in the same field. It's also a way to compensate your management team based on the results. It's also a way to include them is what we call the balanced scorecard, which is what I defined earlier as the metrics and the milestones. So this is what I've been spending with the Agritech team. What are your milestones? Not only in Q2, in Q3, in Q4, what are the metrics that you have? And we put them on the balanced scorecard and we review them on a regular basis. And of course, this is going to help you on defining your company valuation. And I'll share with you the methodology. Okay, so what are now the typical valuation methods? Just want to make sure everybody has access. Is this clear now? Am I on? Are you seeing the slide? What are typical valuation method? Any feedback in terms of, yes?
Yes, all is clear. We can see
all
it.
is clear. Very good. Thank you. Okay, so now we're going to the core. The core is the valuation methods that you have. Now, these valuation methods, I don't know how to stop this thing. Okay, so the valuation methods are, I'm going to focus on 3. One, which I call the replacement methods, the replacement cost methods. So this is for companies that have no revenue, and you will not have revenue for the next 3 months on it. So how do we go, or 6 months, or even 12 months? So this is one method that is used. The second method is the market approach method that we use also with startups, where we tend to compare you because we have, as I told you, we funded more than 150 companies. We have done the valuation of each one of them. So we know, giving your projection in terms of your revenue, because you will not be making profit for the first 2 to 3 years, most likely, we know what should be the valuation in 2 to 3 years, and we discount it back to today. So this is what we call the market approach method. The last one is the income approach method. This is typically used when you have already some historical, but I'll share it with you because this is the most widely used. It's the discount cash flow. Now, each one of them has pluses or minuses. So there is, and the important thing is for you to understand those and use them, because you will get maybe different numbers from one or the others, and you come up with a valuation range, which is fine. And this range could be, I don't know, from $300,000 to $800,000 in terms of your company value. And where we will position you is really a question of supply and demand. How eager are you to get funding? How many funding sources do you have with you that you could consider? If you have no funding sources or only one, you're in a much tougher situation to negotiate. But most importantly, how well are you doing on these 12 M's that I shared with you at the beginning? The better you are in terms of the way you structure it, the way you promote it, the way you understand your model, the way you understand your competitors, the way you differentiate against them, the more likely you are to be closer to the 800,000 instead of the 300,000, as an example, of course. And then you have other methods. I'll be happy to share more on a one-to-one basis, depending on your needs. So let me start with the replacement method. It's very easy. I take Sabah. So this is not Sabah's case, but let's say that Sabah and Lara have created their company. Both of them have spent time on it. Sabah has spent 18 months. Let's say that the expected salary was 2,200. She didn't get a sense for it. Lara has spent 8 months, also at a salary of 1,500. This is all purely, of course, fictitious numbers on it. Salah has put some of her own money in it. She's invested $60,000 already. She has spent her time without getting paid on it. So we come up and we look at the total cost. So the cost is 60,000 invested plus the 45,000. So this is about 105. Then we decide on a multiple. And this multiple is going to be based again on the 12 M's. How good is Sabah to be able to implement her model? What is unique about her platform? Is she a first mover? Does she have the way to differentiate? Does she have clear KPIs and KSIs that she is monitoring? Is there a potential investors that might be coming in a year, 2 years down the road? All these questions will end up deciding whether the multiple is 2 times the investments, 3 times the investments, or 4 times the investment. So there is no real science. It's going to be a gut feel based on the outcome of your due diligence. The due diligence is the process that Muhammad and Ramzi have shared with you, is that when we spend close to, in this case, they're going to spend 2 months with us. We're going to have several meetings. Every one of the meetings, we're asking them questions, they're coming back with answers, like we do this afternoon at 4 o'clock. So based on this, we will then come up with whatever we believe is the right multiple on the actual cost that they have invested. So this is the easiest one to understand, the easiest one to implement, and this is some that we would be happy to go with you. Now, they came up with a value of 316,000, let's say 800, but they managed to get a kafalat loan. We will deduct the kafalat loan and come with what we define as the equity value, which is free of debt at 276. So this is one method called the replacement cost method. This is a first pass in trying to estimate, and it's probably going to be the most conservative one. Why is it conservative? Because it doesn't take into consideration the future. It doesn't take into consideration how much revenue you're going to generate, what sort of leadership position you would have, and what will be happening in terms of growth models. It only looks at the past, how much you've invested, how much of your time. And for us, it's important as investors that you have skin in the game, i.e. you have invested your time for 18 months. This for us is important. You know, Sabah, I won't mention her age, but she is a very experienced leader. She has worked in the corporate world. For her to take 18 months off and to work on it is a sign that she is committed on her idea and she wants this idea to work. The fact that there's money invested, being it from Agritech or from own pocket, is another side. So there is skin in the game. And the more skin in the game it is, the more investors are looking at it in a positive way. So this is the first method, replacement cost method. I'll take your questions after we cover the 3. The second method is the market approach method. Yesterday, for instance, we had the discussion with Ramzi and Muhammad. And we looked, they had a valuation of so much. So he shared it with you. Pre-money today, they are at 1.15 million. This is after Danny has invested in them back in September on it. And now they're in the process of raising funds, and hopefully they will get it for, I don't know, $250,000. Both Cedar and Flat Six Slab will be matching. So we came and the question was, what do you think should be our valuation today? We have been valued back in September at this amount. these are the sort of things that we have done over the past 6 months, and these are our projections. So what we did is we looked at other companies in a similar field. So I told them, you know, we have funded these companies in a similar field, and this is the value that we were able to get with these companies. So we will say in this case, we will say there is company 1, company 2, company 3, company 4. It could be publicly traded, or it could be other startups. So it's not necessarily large companies. So it could be other startups that we have funded 6 months ago, or 12 months ago, or 18 months ago. So we will put it, and we look at how much we have priced the startups compared to the revenue that they are generating today. So in this case, there was a number of, on these 4 companies, and we took the average 6.9. We also took the price to EBITDA. So EBITDA is their operating profit. Now they might or might not have operating profits. If they don't, we just stick to the price per revenue that they have. So this is what we call the market approach, or the market multiple approach on this. And we will apply it because we have data on 150 companies in our own portfolio across the different accelerators. Then we look at your company. Now today they're doing only 22,000, but we know, given the fact that they are going to grow their revenue to a certain amount. So if you remember, it was around $1 million in about 3 or 4 years down the road. So we said, this is the revenue. Let's assume that the multiple in terms of revenue in this case is about 3 times. So we say $1 million, it's 3 times, and this will be in 2024. Then we discount it to whatever is the value today, and we come up with a certain valuation. So this is the way you do it in the market approach, is you look at other companies that you have funded in the past, you look at the price of this company, the value of the company, you look at how much revenue they're generating, and you come up with the multiple of revenue. So this is the multiple of revenue that you get, and you then apply it to the company based on their projections, and you bring it forward by discounting it. So this is the second one, which is the market approach. If of course it doesn't work, if your earnings are negative, you will stick to your revenue on this case. And we do it with a number of companies. And we have a sense of what is going to be the real revenue. So their revenue forecast might be too aggressive. We will discount the revenue forecast and then come up with what we believe is a more realistic one. Okay, so this is important. And now with the number of companies that we have enough data to be able to come up and to estimate what this valuation would be at the stage that you're in terms of a startup. So this is the second approach, which is the market approach. I don't want to go too much in detail. I will do it on the one-on-one sessions. The third approach is the income approach. This is a discount cash flow. This one is a little bit more tricky on it. So those who are not finance, you're going to hate me for it, but I won't spend too much time on it, but I want you to understand it at least. First, you need to understand the company, the economic, the industry.
I hate you.
Yes. Yes, Nada.
I hate you.
Oh, you hate me? Okay, no problem. So hate is the other side of love. So you must love me very dearly. Thank you, Nada. Very good. Nada, by the way, is a wonderful cook. So she has, her venture is, but she is doing amazing meals that she has, and her husband is a very lucky man. Okay, so let me continue on this. So you have to look at these different elements that will help you. Then you will, now I cannot, it's interesting. Why is it working at times and it's not working at other times? Oh, here it is. Okay, so in this case, you determine what we call the cash flows. This is what I showed you. And we can develop your cash flow. We did it with Muhammad, and actually it's Ramzi who did it. On it, I just edited and gave them comments in terms of we look at your cash flow, and then we choose what we call a discount rate. What is the discount rate? It's the rate at which we will discount your future cash flows to today. Now, I don't want to go too much in details of it because a number of you are non-finance person, but take it that the higher is the risk of your company. So the more you're still in a startup phase, the higher is going to be your discount rate. It could be as high as 40 or 50%. But when you are a very established and mature company, this could go down to 20%, it could go down to 15%. Now, this rate is used to discount the value of your cash flow and come up with a valuation. And this is what we call the discount cash flow approach. So how does it look like? What you do is you determine one element, which is your discount rate. In this case, it's a company that, this is the only technical slide that I showed you. The discount rate is basically your weighted average cost of capital. You fund yourself either through equity, i.e. shareholders, or you fund yourself by going to a bank. The bank has a cost. Let's say it's 9% on US dollar today. Hopefully it will go down. So you put 9%. You look at how much debt you have, and then the rest is equity. So the equity is how much is the equity cost. So if we talk to Speed, or if we talk to Flat Six Lab, or if we talk to Berytech, all of us have a certain expectation in terms of the return. In this case, we assume 23%. It could be higher. And we looked at the weighted average between the two, and we come up and we make some adjustments. And in this case, we came up to 23%. So this is the rate, and we will compute it for each of the companies. But in the case of a startup in Lebanon today, 23% is on the low side. You're probably going to be in between 30 to 40% based on how much you have advanced on your prototype and on your MVP. So this is what the discount cash flow is. So this is an example. We look at your operating cash flow like we have done for our friends in Clean 2.0. We include your CapEx, if there is any CapEx. We determine what we call the free cash flow. At this stage, we use a discount factor. In this case, we use the 18%, and we come up with a certain value. So this is it's fairly straightforward. We do it, but this is one method, and I showed you other methods, and then we come up with a range. And based on this range, we will tell you this is what we believe your company value is going to be. And this is a discussion. It could be 2 discussions, it could be 3 discussions, but we will give you the range. And this is what we do at Berytech, and we'll be happy to do it in case you have a need. We're actually doing it with a number of you with whom I'm working, over the past couple of weeks. Okay, I'm going to go to another topic. Maybe I'll stop at this point. I know I've gone through quickly on a topic that is Chinese to most of you. So what I would like is if there is any question that could be of the interest of all the others, please raise it. If not, take it with me on a one-to-one basis. So any questions at this stage? If you could write it on chat, I could see it. Okay.
I will leave Hiba ask you if she has any questions. Hiba, do you have any questions for Constantin?
No. All clear.
Okay, very good. This is great. So this is Nada delegating. So Hiba, ahla wa sahla fike. So probably we'll do it on a one-to-one basis. Okay, so let's focus on an important topic. You say, Constantin, valuation is great, but if there is no money, why do I care about valuing my company? So the answer, and you heard it from a number of sources, this is on purpose, I've asked them to come and to contribute, is money is available and is available today, and we're funding a number of companies and will continue to fund more companies as we're going to get more programs focusing on the development of companies, startups, small and medium sized. So what are the different types of funding? You have grants, and I'll share with you some of these. You have debt capital. You will have, although today you did not, because the banks are stopping to fund and might stop to fund for a number of months, if not years, but there will be other entities that will be providing debt capital at a subsidized rate. So this is another way to be able to help the companies, is to provide them debt capital. The third one is what we call convertible debt. It's a debt, but it's a debt where I have the option to convert my debt into equity in your company. So this is the third way to do it. And more we're going to see this mechanism, and it's a win-win for both parties. The fourth one is the equity capital. So this is investing like we do. So for instance, in the case of Impact Rise, or in the case of Agritech, and in the case of Cleantech, these are grants. In the case of Flat Six Lab, and in the case of Speed, this is equity capital. So we give you the money, but we take. In the case of Clean 2.0, they took 10% of the company in exchange for the investment that they had for $115,000. So this is examples of grants, an example of equity capital that is taking place. These are the 4 funding sources. Now, I don't understand why. Okay, so I'll go quickly in terms of debt. What are the pros for debt? Normally it's fairly quick. So to get it, it takes much faster than equity. There is no due diligence. There's only a few questions and an application to file. It's as easy to exit. So we pay back whenever we agreed on what we pay back. So the term is 3 years, or it could be 5 years. The interest rate could be 5%, could be 7%, and the payment would be quarterly. You might have a grace period of 1 year, depending on the discussion. The lenders do not get involved. All they ask you is probably, the banks will ask you your financial statement for the end of the year, and the record keeping, i.e. responding to their question, is fairly light. So these are the pros. The cons is expensive. It's expensive in a way where you have to pay interest. And in most of your company, ma عندكم cash yet. You don't have revenue. So how can I pay interest unless I negotiate a grace period? And it requires assets, i.e. collaterals. They want collateral, they want an apartment, they want a piece of land as a collateral, and this could be also expensive for you, especially during these days. So this is the pros and the cons of debt. What are the lenders looking for? In most cases, they're looking for collaterals. In case you bankrupt, what do they have? They also, for the banks, they look for your banking business. They don't only want to provide you, they want to do your payroll, they want to do your personal banking, etc. They want also a business plan. They will ask you for a business plan to understand it. And they also want to make sure that your accounting practices are good, that you have an auditor, that the auditor is doing a good job, that you have audited the financial statement. And they might ask for a personal guarantee. You need to push back on this. So this is, this will be, but unfortunately banks tend to focus a lot on the first point and the last point on it. And then they don't care how your business goes because they have the collaterals and they have the personal guarantee behind it. You need to push as much as you can on the last one, and if you can also on the first one. So this is what lenders, what you look for? What you should look for is you look at price, but not only the interest rate, because they have all other fees that are hidden. They will tell you an upfront fee of so much, or they will tell you there is an annual fee of so much. So you have to look at the overall price, not only how much rate, if there is any other fees hidden, to understand it. This is a situation in Ghana where you have exposure because Ghana had a big currency devaluation like Nigeria, but in Lebanon, we're facing a very similar situation. You have to be cautious. If your revenue are in Lebanese pounds and you are borrowing in dollars and need to pay back in dollars, you have what we call a foreign currency exposure. And this is dangerous because you could find yourself, if there is a severe devaluation of the Lebanese pound, as it might happen officially, you might find yourself with, you have to still pay back in dollars, but your payment becomes twice as expensive. Instead of having a $50,000 loan, you might find yourself with the equivalent of a $100,000 loan with a devaluation that takes place. So this is critical. When you take a US dollar or a foreign currency denominated debt, you need to make sure that you have enough revenue coming in foreign currency to hedge it. If not, you're exposed. And if you're exposed, you need to find a hedging situation. So this is the, you have to be careful for this. You also need to factor what we call working capital. We have Sea Green. They're also doing the due diligence at 2 o'clock. They came up and say, Constantine, we need $400,000 to build our warehouse. We need $200,000 for the capital, that the equipment that we're buying, $600,000. And I said, this is what? They said, yes, this is it. I said, no, it's not it, because you're going to sell to distributors. These distributors will not be paying you before at least 3 months. If you're lucky, it could be 6 months. And this is money that you need on top of your capital expenditure that you have for your warehouse and for this. So you have to account for your receivables that are not going to be paid. You need to account for the inventory that you will be building, where your inventory is 1 month and your receivable might be 6 months. So your $600,000 ends up being maybe $800,000. So this is why it's important to factor in the working capital, especially the receivable, but also what you need is in terms of the inventory. And then you normally try to match the debt with the project. If the project is over 7 years or 8 years, if it's a big project, don't take a short-term debt for 1 year because you're exposed. Yes, don't take, because you don't know what the interest rates are going to be in 1 year down the road. So you normally would match the duration of your project or your venture that you're trying to do with the duration of the term. And lastly, you need to review your asset base because the price of land or the price of buildings, if you have land or building that is in your balance sheet, might increase. Now, recently, over the past 4 or 5 months, you had an increase in terms. Why? Because a lot of people are trying to buy land and buy, so you have to revalue this. So this is another element that you should look for. Now, this is on debt. On equity, the positive behind it is that you have a long-term view. Your equity investor is here for at least 5, 7 years. Now, some of the companies that we have invested back in 2010 were still there. So this is 10 years. Investors normally should add value. This is the point I've mentioned. They should help you. They should bring up, suggestions, networks, open doors, help you on the pain point that you have. And it's always good to have a third party because it will bring you discipline. It will force you to do things in a structured way and rational way, especially in terms of metrics and in terms of milestone and in terms of the review mechanism. So having an outside investor coming in is going to force this discipline. What are the problems or challenges? You are not the only captain on board. You will reduce your level of control. You have to report, and some of the cases on hiring or major investments, you need to have the blessing of the investor before going in. The due diligence that we go through could be intrusive. You heard it from Hamad and from Ramzi. We're taking 2 months and we're asking them all sorts of questions. Not only we want to see their financials, we want to see their marketing plan, we want to see the IP, we want to see the patent filing. We're talking to the lawyers to find out if this patent has chances to be successful or not. We will be talking to whoever are doing the production to see if this product, is there a way to get efficiencies in scaling it. So these are intrusive elements in your company. And the existing relationship may be complicated. I have cases, I won't mention the companies, where the investor and the owner don't get along at all. They actually hate each other to the point that the owner is trying to find ways to be able to buy out the investors because they are not at all aligned in terms of values. And if you're not aligned in terms of values, this relationship is not going to work. And we don't want this to affect the, so this could be very important, and you don't have enough time maybe to get to know. You need a crisis to get to know the investors and to see how he or she would react. So this is the pour and the core. What are investors? The investors are looking for what I've mentioned already. They want to see a solid plan. They want to see a solid management team. They want to look at your cash flow to see how attractive it is. They want also a lot of other information, operational metrics, market information that we go through the due diligence. They want to make sure that there is good chemistry, that we can talk the same language. We are having fun working together. We're even having fun fighting together. They most probably want to have a board seat and they want to attend every single one of your meetings, and they will force you to have board meetings on a structured basis, at least on a quarterly basis. And they want a liquidity event in the future, most typically 5 to 7 years, where they know that there's going to be an investor that could buy them out because they're in. At the same time, they need to return the money if it's a fund to their investors and be able to invest in other companies. So this is what investors are looking for. Now, who are these investors? You have grant providers, you have microcredit providers, you have debt investors, you have small and medium cap equity providers in Lebanon. Now, I have a long list. You have more than 100 names in it. This is both investors, grant providers, international NGOs, local NGOs that we have, and I will share those with you. So, but to map them in Lebanon, you have, in terms of grants, ISME is part of Kafalat. Al-Fanar was supposed to talk today. Unfortunately, we're running short of time, so I will ask them to talk. They're providing, and they've been the one most aggressive with social enterprises. Actually, the first one who are funding through grants social enterprises, and now they're providing not only grants, but they will be providing also equity funding. So this is important. They're present in different countries. Bada'il, I've been working with Bada'il as a coach, and they worked with Oxfam, and they're providing grants for the companies. Clean2O that you have heard received the grant. We have, some of you here are coaching on these companies. We have 40 companies that receive grants from Bada'il on it. Impact Rise is the one from Berytech, where we are providing grants. Agritech, you heard it. Smart ISA is another one coming from ISA. The amounts of grants are smaller. LEAP is the way they would do. LEAP is a UK funded entity that is matching the debt that you have raised, 50% of it, but I do it as a grant basis. So you have Nadine is ahead of it. So you have a number of, and then you have business plan competition. Francophone is one. You have other competition from leading banks, from other, every single 2-3 weeks, of course, before the crisis, but it will continue. These will continue. So these business plans are there. They give you 5,000, 10,000. In some cases, it could be up to 50,000. Maroon Shamas, who is the chairman of Berytech, has done his own funding and provided, and Quadra was the company that won the 50,000 behind it. So these are grants, and you'll get a complete list of it. Microcredit is for smaller size. AEP, c'est l'agence, I forgot what it is, professionnelle, l'association d'entreprises professionnelles. At Tamkin, Al Majmoua, you have MCAN, you have ADR, so you have a number of microcredit loans association. You have also debt, subsidized debt. Kafalat used to provide it and will continue to provide when we go through it. Kafalat provided hundreds of subsidized debts that came in. They also provided grants through ISME that they had. ESFD is another one providing grants. Alpha Capital, you have EBRD, debt funding. EBRD is the European Bank for Reconstruction and Development. They also provide grants, by the way. They will fund whatever projects that you have, up to 75% of it through a grant. A similar project is with LED. So this is part of also Berytech that are doing it. So you have a number of players that are active in debt funding. Small cap equity, you heard Speed, you heard Flat Six Lab. I'll be happy to provide you Cedars, information on Cedars where I'm present on it. LWAF is the Lebanese Women Business Angel Association. IM Capital, they all provide what we call small equity cap from $30, $50, $100,000. Medium cap equity, Berytech, MEVP, MIC, BNY Venture, Azure, Euromina, Sanet, Phoenician, Sidamundi, all those are players that have been providing and funding a number of companies that you have. Now, a number of them now are a bit in the freezer because of they are 331, and for the moment 331 through central bank have other issues to tackle, but they will come back. They will come back on it, and they will be once the situation is over. The others that I mentioned earlier, most of them are active. And then you have crowdfunding, Zumal and others that are doing. This is for smaller amounts, and this is normally from social causes that you feel are important for you. So these are the different funding options that you have. So we had the Circular 331. This was about $400 million that have been made available. We had 300 companies that have been financed over the past 5 years. The players there are the players I mentioned earlier. The World Bank launched a loan for $30 million. This is for seed and growth stage startup. This is operated by Kafalat. This was the ISME fund, and they will extend it once we go back. So this is grants of $15,000 to entrepreneur, and we will hopefully extend it towards the end of 2020. USAID have launched the $15 million matching program with IM Capital that they have, and they're also going to get another tranche which will be larger, more than double the size, and this doesn't belong to Circular 331. This is independent, and then you have several banks working with international banks like the European International Bank, EBRD, and others that are also providing subsidized loan in specific sector, either in water management, in environment, in clean technology. And I am convinced that you're going to have a number of other programs coming in, not only as subsidized loan, but also in terms of grants. So you do have an active funding sector. You will need to have an expert or an advisor to help you navigate through it and help yourself, help you get prepared. So who is the right investor for me? This is a question. It's like if I ask Sabah, I'm going to let Sabah speak on this one and answer the question. You know, Sabah is happily married. She has 2 beautiful children that are, but the decision in terms of the investor is probably for her business is as important as the decision before she married her husband, and she asked herself a number of questions. It's the same sort of question that you need to ask yourself when you get an investor, because it's a long-term relationship. It's going to be a tumultuous relationship. We're going to face problems together. We want to make sure that we could succeed on this program. So I'm going to stop now and ask Sabah. Sabah, are you still on the line to unmute her phone and to share describe her company, describe her experience that she had in terms of valuation, and share whatever key learnings are with the rest of the team. Sabah?
Hi. I wish I'm gonna do on my business as much as I did on my personal life, Constantin.
I'm sure you will.
I hope so. I'm gonna share my desktop, if this is okay.
Fine.
Okay, 1 second. You need
Should
to
I remove
unshare.
mine?
Yeah.
Should I pause share? Okay, I did pause share.
Not pause, you need to unshare.
I don't know how to unshare. So I have new share and I have resume. I had pause share. So I don't know how to unshare.
I guess there's a leave share.
Where do you see the leave share?
I think it would be down the screen to the right or on top to the right.
I look on top. Let me see more. I have record, invite, disable, show names, hide, share. I have leave meeting, which I don't want to do. I don't have
it. Press on the share again.
Okay, I'll press on the new share again or the post share.
Post share.
Okay. Now post share put me under resume share. Your screen sharing is paused. So go ahead.
Okay, I will try again.
It takes a few seconds.
I still can't share.
Okay, so maybe share it orally then,
Okay.
Sabah, and I will check with. Go ahead.
Let me try again 1 second, and then. Okay, so I'm gonna do it verbally, though I had some numbers that I wanted to share, but it's okay. First, I'm gonna introduce a little bit what we're doing, and our operation is called Regino. What I'm going to do, I'm going to explain what we do, and then I will tackle in a summary what we did for our financial model and valuation process. So Regino is founded by me, Sabah, and Lara Al-Khouri, and both of us are complementary in terms of skills and experience. And marketing, and Lara.
We're losing you, Sabah. Sabah, we're losing you. Your micro is on, but we lost your voice. I'll give you 10 more seconds. So I'll try to fill in till Sabah is on board. Sabah has been part of the Agritech Accelerator. So she worked with the Agritech team for 12 months. This was last year. She went through 3 phases with Agritech. So we have phases, 2 to 3 months, then we have another phase, and then we have the final scale-up phase that she went through it. So she is out on it, so probably she's going to reconnect again. So she has been working with the co-founder, and she is providing a platform that is able to track the food safety. So this is, you track the in the value chain from food production, from actually the picking up of whatever is the ingredients to your producing the whatever. Yes, you're back.
Yeah, I'm back. Sorry, I was disconnected.
Okay, no problem. Go ahead.
Okay, so I was presenting what we do. So Regino is trying to solve a major problem in the food market where we do not have traceability for products. So this traceability is something becoming more and more mandatory to create trust in the product and to give options to consumers to know what they are selecting. So is organic, sometimes we wonder, is it real organic? And we wonder if this product is healthy, or does it contain GMOs? Consumers today are demanding to know more and more about the ingredients so that they have more options in their selections. So far, we don't have the solution, so Regino can do that. And the traceability that we are building, the traceability platform can address the need in the supply chain to create a transparency. What Rami was saying this morning about from farm to fork, this is a real slogan of traceability. So we look at the supply chain and we think sometimes that it's a simple process. Well, it is not. It's very complicated, and networks are interconnected. Products are coming from all over the world. So what we thought is that we want to create this layer, which is a platform where data can come from different parties, connected together on our platform. So the farmer will introduce his data, the manufacturer will introduce his own till it reaches the supermarket or the retail, and then to the consumer. So with our operation, we target brand owners, so manufacturers who are also brand owners, and they are responsible for their brand reputation and above this for the safety. So when we approach these customers, these profiles, we ask them, and to map their supply chain, we ask them about every single incident in the supply chain, and we call it the 5 W and H. So we ask them about the what they did, where they did it, when they did it, who did it, and why, and then how it was done. So we collect these information and we upload them on the platform. So Regino will allow the manufacturer to create reports immediately. Today, a manufacturer, not only in Lebanon, by the way, across the region, will not be able to immediately generate reports. They have concatenated data in different software or different back-end solution, and they can, because if they have ISO, traceability is mandatory, so they have these data, but we're seeing most of the cases where these data are not digitized. So we target with Regino the MENA region, Middle East and North Africa, and we are starting from Lebanon and the UAE. So not only Lebanon, so we're targeting, our market target is the whole region. And we did some study in the region around what's happening in terms of traceability in this part of the world, and not much is being done. So we are a product as a service, so we generate revenues from B2B. So manufacturer will pay us and two revenue streams. The one-time setup and advisory where we onboard them, so we implement for the onboarding, and then our solution is mainly based on subscriptions. So depending on the number of units that they upload on our platform, we created packages where they can pay in a way that this will not affect the final price of the product. So it is by the order of 0.0x% of the price of a product. Our financial targets are very positive. We expect to grow at a rate of 65% from year 1 to reach year 5. I wish I can show you on my laptop because it's we see how we are growing, and the main revenue or the growth is generated not by onboarding but mainly by subscriptions. So every year we have new subscribers, and every year the same subscribers will upload other products, so we generate more revenues. So our expenses are not growing the first 3 years we invest a lot in our platform, because today we went agile with our solution. So we're creating the features depending on the request of the customers that we are onboarding. And we're growing with it. So features are not complete the way we have conceived the platform, but we're growing with it slowly with each customer. So I'm gonna tackle now immediately the valuation of our company and how we did it. In fact, we did the valuation in 2 ways. And this is, I really thank Agritech and the team because they supported in this. And between parentheses, neither me or Lara are financial background. So we came into this without having a clue on how we can do our evaluation. So the first one, which Constantin just explained it, it's the cost-based method. So we looked at our investment. So we went to ISME, which also Constantin mentioned a minute ago. They gave us grants. Agritech gave us also grants in terms of money, without mentioning the services and the mentorings that they gave us. So in total cash, we received $56,300 from ISME and Agritech. Then we injected money, Lara and I. So we injected a small amount of money for now for $20,000, and we have put our time. So my time and Lara's time, and we evaluated the whole total cash to $326,000. The valuation, to get to the valuation, we looked at what we are working today in terms of platform ready to customer onboarded. We have potential leads and the sales pipeline already, we're working on it. And we created good partnership across the region. So we have the multiplier to be evaluated to either 2 or 3. According to Agritech, we went conservative, and we got the multiplier times 2, and we got evaluation of $756,000. So the second method we got, we went for it, and which Joël from Agritech helped us to do it, is the discounted cash flow method. So the first method we went is based on resources invested in the past, while this method was more looking into the future. So looking at our future forecast of the company cash flow, we came out with a valuation. We came out first with the WACC, the weighted adjusted cost of capital, and it was quite significant because it came at 20.72%, but we didn't apply it. So we applied the 30%, and we came at a valuation of our company at almost $1.2 million. So these were the two methods followed, and today our valuation is in between. So depending on the investors that we will have, we will be finalizing our valuation, and eventually they will do the valuation. So just take a small parenthesis. What we are doing today is we are, because of the pandemic and because also of the revolution and all the delays we have, we're reviewing all our business plan and our financial planning so that we adapt to the situation. And meanwhile, we're trying to work on the things that do not need lots of customer touch. So we're improving on our features in our platform. We're working on our partnership. So already we're working on 2 partnerships across the region. We're looking on consultancy needed for one technical expertise that we need, and we're getting it from Holland. We are in discussion with these experts there to get their support during this period of time, which were not supposed to come now immediately. They were in our product roadmap, but we thought we can do them later. But we're still doing them now because we have the time for it right now. So that's it. If you want to know more about Rigino, it's rigino.com. Go on our website, and you can call me also, or get in touch with me.
Salah, thank you so much. Appreciate your time, appreciate your passion and drive on it. Every time you've been volunteering on these, I really appreciate it. Thank you and good luck to you.
Thank you.
Okay, we will continue because we have another 10 to 15 minutes and we will close at noon. So I just want to cover a few topics. I know that you have a lot of questions to Sabah on it. So let's maybe we could take, so we have review.com. Okay, so she has shared with you the information. This is great. So let's now, so what are the questions that you should be asking yourself in terms of if you have the right investor? So the question, again, why is it, okay, question, okay, here it is. Okay, so this is you need to make sure, and I've listed some, but you could have your own list, is you need to make sure that the investment has a proven track record in similar sector. So for instance, she is in the food safety sector. She wants to make sure that the investment can help her. The investor can help her, has a presence there, or can help her in terms of the pain point. She has to finalize the technology. This is the platform. This is a major investment. So if an investor is here and has the capacity in terms of software engineers to be able to help her, this is of great value to her. And one of the investors is doing this. She wants also an investor that is present in the geographies that she is growing. So this is another way to be able to look, is that expertise either in the sector, expertise in a function, expertise in a geography, or expertise in a customer segment. This is important. The second one is you want to see whether this investor have invested already. And did he exit? Not only he invested, but these investments were productive and he was managing to exit and have some good return on these investments. This is the second criteria. The third one is she needs to make sure that she is aligned in terms of values, in terms of the way the investor is leading, how is he going to, is this aligned with how she is expected this investor to behave from a leadership perspective. They also need to make sure that they have an alignment in terms of what the exit is going to be. Exit means when the investor will be able to sell the share. When are we exiting? At what value are we exiting? What type of exit? Who will be the potential investor that will come in? All these questions needs to be discussed upfront before you decide to join, to have one investor come in. You also need to look at the quality and the completeness of his team. He's going to do the same assessment on your team. You need to do it on his team or her team. You know, are they a good team? Do they have a good reputation in the market? How well have they managed their business? You look at the number and quality of customer reference. Who did they invest already in? Are these companies that they invested in happy with them? The availability, does he have money? You know, you have a number of investors today in Lebanon, for instance, that don't have any more money available. So you want to make sure not to waste your time and waste their time. Do they have money to invest? How much money do they have? How much would they spend on your company in case it goes through the investment committee? So these are questions that you need to be asking. And the lastly is the dynamics, because once he wants to ask, he will ask a lot of questions during this due diligence. As this is going to be very detailed questions, you will find out whether you can work with this person as an investor, yes or no. So these are some of the questions that you need to be asking yourself on it. Now, the due diligence process, I will not bore you with it. I will send you a list of typical questions, but we will go through anything from the structure of the company to the CVs of the management team, to if you have market data, market surveys that you have done, market analysis, we want to see it. We want to validate your business strategy. Is it B2B now and B2C later, or the vice versa? What makes sense? What is your positioning? Who are the competitors? How do you differentiate? So for instance, Hamad is preparing this document. He's preparing the document on the competitive positioning. He's also preparing the document on the go-to-market strategy for this afternoon. He is also preparing the document on the legal side because he's filing for IP. He's also preparing the document for the certification to be able to export. So all these documents will be part of the due diligence process. Hassan, who is on our call now, Kozah is leading this due diligence and will be asking the questions and then submitting his recommendation, hopefully positive, on us to move forward in funding Clean2O on it. So this is what the process is all about. I'll share with you the file that we use at Cedar. So this is the templates that we will fill in for each of the company that we evaluate. So this will give you a sense of what the due diligence process is. And it will typically take, I would say, 1 to 2 months to do a fair job, because it's questions, we get answers, we ask other questions, we get other answers, but this is, and we have these meetings on a weekly basis or bi-weekly basis over a period of 2 months. Each one of them lasts for an hour and a half. So this is the due diligence process, and you need to understand it, because why is it important on valuation? Because the output of the due diligence process will have an impact on what the valuation is going to be. If we find that there are risk areas and he's asking for a valuation of 1.8 or $2 million, we say, look, with what we have found out, we believe a valuation of 1.5 million will make more sense. So this will be why the due diligence is there, because the whole point of the due diligence is to validate what we have heard, what we have seen, whether it's solid, are the assumptions relevant, are they quantifiable, and if there is the valuation the correct valuation? And we'll get the answer through the due diligence. So initially we'll come up with a preliminary valuation, and after the due diligence, we go back to the investment committee and we say, we believe this is a good deal to go. We believe that the valuation should be adjusted downward by, I don't know, 10, 20%, whatever it is. And then, and we believe that these are the 1 or 2 or 3 conditions that we want to add on it so as to make sure that we're all aligned. So this process is critical in determining the value of the company. And how well you prepare and your response for it will have an impact on your value. So here you have different elements. This is another slides. We will look, for instance, at your marketing plan. We will ask the person in charge of marketing to present it, which is what we're doing this afternoon. Production, we want to see, talk to whoever is producing these filters today. how they would produce it in 2 years down the road, who will be the right injection mold player here to be able to do it. So these will be the sort of question they will be asking. Now, I'm going to finish with this and leave you if you have questions. So what are the learning? And each one of you will get their own learning. I tried to put some here. The first thing is you do not aim for perfection on the first company evaluation. So because you're going to have several of those. One is because you're going to talk to several equity partners in a given round, and each one will come up with a different valuation. But focus on the process. Understand what you could do better. So learn from the first one, and never start with the investor that you are most interested in. Start with another investor so as to test yourself. See how well prepared you are. How well do you answer the questions? What is the quality of your investment deck? What is the quality of your valuation? Does it make sense? And you test it, you learn from it, and then you go for another one. And hopefully after the second or third investor, you go with the one that you're most interested in because you have learned through the process. So focus on the process and gain the best practices for your next round. So this is either within a round because you'll be talking to several, or when you're going to have a future round, because trust me, if your company is doing well, you're going to have future rounds. The second one is on reach out for advisory. Don't try to do it alone. You will fail, or the likelihood of you failing will be high. You need to prepare yourself, mostly on how well you answer the question. So get yourself an advisor, get somebody, and Berytech is happy to provide with these services. Get yourself somebody who could help you on negotiating the valuation, negotiating the term sheet, helping you in preparing for the due diligence. All these take questions. You know, with Clean 2.0, I sit on both sides of the table because I help them in preparing for whatever questions will come up. And at the same time, I'm not the deal leader, Hassan is the deal leader, but at the same time, we want to make sure that we are asking the tough questions so as to be able to come up with a fair valuation. So get yourself advisory help, and these help are available. And reach out to us in case you need specific names. The selection partner is the second most important. I mentioned this after that of your soulmate. So make sure that you have alignment in values and in strategic direction and in exit strategy, even though the valuation might be lower. So I would prefer to work with an investor with whom I get along on all these dimensions, even if he comes up with a valuation which is 20 or 30% lower than another investor, where I'm not sure of his behavior, I'm not sure of the track record that he has. So this is an important decision. Take the time. The fourth thing is start always with grant funding. And I have a number of companies out of the Agritech last round. We had about 8 or 9 in the final round. 2/3 of them, 6 out of the 9, got grant funding. So you can get grant funding. Why? Because this is the best way, not only the grants coming from Agritech, but grants coming from others, sources that I've mentioned, because this is what you need to build up your MVP, to validate it, etc. Then you shift to debt or convertible debt. Don't yet get to equity. Why? Because your value is increasing at every step of the way. So get equity partners when you have already a proven model and you have already customers that are willing to testify and this is where you get to equity in order to be able to scale. But the MVP phase, the prototyping phase, the market validation phase, try your best to get either grant or debt funding and then shift to equity when you're going to scale. The last one is on when you go to equity, do it in tranches. Don't come up. I'm working with a hospital in Ghana. I've mentioned this to some of you. We're raising $30 million in debt and equity. We started with debt 2 years ago. Then we moved with the larger debt with IFC, the World Bank on it. And it's only in 2 years down the road that we will start equity. So we are building all the infrastructure and all the basis for growth using debt and convertible debt, and then shifting to equity once we have a great story to share. Not only projections, but actual customer testimonials, actual success stories, and actual validation of how you can scale and how I could take this company overseas. So these are some of the messages. I'm going to stop now. Before I stop, I want to thank all of you for taking the time. This is 3 hours. It's a long period for a webinar. I appreciate, Joanna, the opportunity. I hope we have other opportunities on this. Thanking, of course, our friend Sheila on it. Now, you will get evaluation form. Now, it's important for us. It's important for us to understand what we can do better, but it's also important for us to understand what are the other topics that could be important to you, because we will then adapt these workshops based on the topic of interest to you. Now, I know that the webinars are important, the one-on-one sessions are important. Sheila, if you are interested, indicate it on it. I will then give a day a week. This is what I typically do, 1 day per week, in order to be able to have you, and then I will list all of you, and we typically can run 6, 7 sessions on a daily basis, and to do it online is no problem whatsoever. We've done it with a number of you already that are on this call. Okay, so let me see the questions that are coming. Thank you, Constantin. Okay, thank you, Dan. Okay, good. So is there any questions?
Constantin, thank you very much. I mean, you know, you fill us with so many information that for me, I would say I need time to digest it, yes, to receive all the information by written, to read them, talk to my team, and then get back to you with questions.
No problem. This is great. Now, if you didn't hear back from Sheila over the next 2 weeks latest, let me know. But I'm sure Sheila, I don't need to. Sheila is on top of all of us in Berytech, so she makes sure that what we promise, we deliver. So you will get this information on it, and then you could come up with your question, and having also Hiba to join you there, and I'll have the discussion with both of you. Now, I want to end up with a bit of a spiritual note. We're talking about numbers, we're talking about projections. This is all great. But this is a quote, and I think this is coming, I think it's Einstein, I'm not sure. Everything that can be counted does not necessarily count. Everything that counts cannot necessarily be counted. So the message behind it is really take the time to be with your loved ones, because these moments that we share together are probably the most precious one that we have, especially as we're going through hard times. So keep safe, keep healthy, and feel free to come back to me on your needs. And we look forward to receiving all your comments on the feedback form. Really appreciate your time, and have a wonderful afternoon. Thank you.
Thank you.
So we're going to close.